Welcome to MMA Turkey and MENA Virtual Impact 2020. My name is Sanem Çelenkler. I'm the Vice Chair of MMA Turkey, and we will be hosting the event today along with my partner in crime, Erdem Tolon, who is the Vice Chair of MMA Turkey and also Vice Country Manager of Kantar Media Turkey. Erdem, before we get started, we would like to say a huge and a heartfelt thank you to everyone who is working to keep us safe and connected in these difficult times and challenging days. Thank you all. As the world's largest marketing and technology trade association, we're proud to present MMA Turkey and MENA Impact Virtual in this unprecedented time. MMA's main proposition is to lead and shape the future of marketing. And since 2020 is an unusual year, all business around the globe created unusual solutions to their problems. This year, we'll learn even more to be creative, innovative, but most of all, caring for each other, for in need and for the planet. As the Industry Trade Association, we are grateful to all of our members, board of directors and supporters. I would like to thank our sponsors, Akbank, Garanti BBVA, İşbank, Yapı Kredi, Adjust, AdColony, Facebook, and TikTok. We also have generous supporter brands such as Meditopia, the leading meditation app of the region for breathing sessions. We have one more generous supporter, Meditopia, who is the leading meditation app of the region. They will be giving us away today 100 monthly premium subscriptions to our attendees. So, dear all, please keep with us for instructions on free premium Meditopia subscriptions. We will be having some surprises for you. We also have generous supporter brands such as Meditopia, which is the leading meditation app of the region. And they will be giving us away today 100 monthly premium subscriptions, Erdem. We will be having a surprise for all of our attendees.
Hoping that we'll be one in the top 100, right?
Let's keep it to our attendees.
Okay.
So over to you.
Hello everyone, good morning. This is Erdem Tolon. I'm the co-chair of MMA Turkey, so as Handem, and also the vice country manager for Kantar Media Turkey. Actually, we have held a lot of events during the past years, but this one is quite special, and you might be thinking then it's about COVID-19. And Handem, you met your test, right? You are COVID-19 free? because we are now very close.
I
Although
negative.
this is a virtual event, this is not very virtual now, so we are together with Handem.
We had all of our masks and distance,
Yeah.
but
Not now,
time.
but we are coach free. Don't worry about that. Yeah. So what I might say is that why this year's event is so important is not just because of COVID-19. During the event, you'll be hearing a lot of stories about how COVID-19 affected our world. It worked as a catalyst, especially, right, for mobile and for digitalization, especially. But when you look at it, and when we look at it, we have another important thing to tap on. It's the gender equality. As MMA Turkey, this is the first year we are giving awards for gender inequality. We are part of United Nations Anti-Stereotype Alliance as MMA Turkey. Thanks to our President Ahmet Puras's support and help, we are actually trying to form our committees, board members, even the speakers today, which is quite, aligned with the gender inequality issues that we have. It's always 50-50. That's why you are seeing both of us together, and we believe that gender equality should be an important aspect that we should be tapping at all times, like today. And what I can say is that we are supportive of gender inequality in all aspects. And this year, actually, we are giving an award based on gender equality and gender equality in business unusual categories. This is the first time that we are doing it in MMA. So MMA Turkey was leading this especially, and now I think throughout the world, in all the Smarties programs, awards programs, gender inequality is a very important aspect. Within this in mind, we created a line of great speakers today, and we have 4 big teams to talk about. Our first team is going to be about business unusual. While working in companies, we usually talk about business as usual, BAU, but now we are going to be talking about business as unusual because we're at unusual times. And it will take place today till the noontime in Turkey, and that will be 13 hours on UAE time. Later on today, after 1 p.m. Turkey and 2 p.m. in UAE, we're going to be talking about another important aspect, which is called growth marketing. Tomorrow, on the 9th of December, from 10 a.m. Turkish time, 11 a.m. UAE time, until 12:30 Turkish time and 1 p.m. UAE time, we're going to be talking about new technology environment in this challenging world and tools that ease our lives for marketers. And in the afternoon from 1:30 Turkish time to 2:30 UAE time, we're going to be talking about new business learnings from gaming and e-commerce, 2 powerful fields in our ecosystem.
So, today and tomorrow we are aiming for an insightful 2 days event. As a reminder, you may find the detailed agenda at our YouTube channel notes section and your registration emails. Before we go on with our sessions, we would like to start the day with a surprise, Erdem. Do you know what the surprise is?
I'm now getting really curious. What's that?
It's a square breathing session with Meditopia. So Meditopia's first surprise is on stage. So do you have an idea what square breathing technology is?
Considering the fact that yoga, Pilates, and all the other things that's been really making a hype in the COVID-19 times, really that's curious. I'm really getting curious now.
You're quite on spot. So according to my notes, square breathing is a breathing technique that helps you to feel energized and focused. It can also help to reduce stress and invite feelings of calmness and tranquility. So everybody, please sit back, relax, breath, and enjoy.
It is my pleasure to welcome you all. We are proud to be hosting Mobile Marketing Association's Turkey and MENA Virtual Impact 2020 conference, which is a part of MMA's signature events organized all around the globe. The MMA is the world's leading global non-profit trade association of more than 1,000 member companies from nearly 50 countries around the world. MMA member companies hail from every faction of the mobile media ecosystem. Our consortium includes brand marketers, agencies, enabling technologies, media companies, and others. The MMA's mission is to accelerate the transformation and innovation of marketing through mobile and other modern marketing tools, driving business growth with closer and stronger consumer engagement. And this year, to honor all the business working through their way in these unusual times, we have gathered the conversation around 4 major themes in 2 days: business unusual, growth marketing, new technology, and new business, in order to showcase our audience real cases coming from their peers all around the globe. Welcome and hope you enjoy the conference. Now, I would like to invite Greg Stuart, MMAGlobal CEO, to give his opening speech and kick the day off. Thank you very much.
Good morning, everyone. My name is Greg Stuart. I am CEO of the MMA, and I just want to take 2-3 minutes here to welcome you to MMA Impact Virtual Turkey and MENA 2020 Business Unusual. I wish I could be there in person. In fact, I think I was going to come here recently, and it didn't work out for the timing. But I know Melise has another trip going. So, Melise, I can't thank you enough for the efforts that you take on there on behalf of the MMA. I really appreciate it. I don't know how many of you know this, but Melise was my boss at one point. She was global chair of the MMA. And I was super excited when she was able to be a part of our efforts to really rethink marketing globally, not just mobile, but way beyond mobile, which I think most of you would know at this point that the MMA is pointing that direction. I know you've got a great agenda today. I know you're going to be spending time or have been spending time as an industry there, thinking through MMA's first, second strategy. That idea that you have very little time with the consumer, and we need to create the maximum communication to sort of hold their attention, because they'll often be gone in 0.7 of a second in a mobile environment, in particular, and even faster than digital, and maybe even faster into the future and other media that we all come up with. So marketers got to really think through how to capitalize that. First, second strategy is the beginning of that. We're doing some more research around that too. I also would be remiss too not to highlight a couple of things that I think globally, research insights that we're doing that I think will be really helpful to CMOs. The work that we're doing in our marketing org, it's called MOST, but marketing org think tank, is really powerful. That work is being featured in HBR this quarter. That's a very high watermark for us. They've been working on that now for 3 years. That fundamentally suggests that most marketing org changes are made often around politics rather than performance, and this gives a quantitative tool for CMOs to really think that through differently. Also, the work we're doing a data think tank, which is helping marketers understand how to apply data. The work that we're doing in outcomes versus reach is really powerful. Conventional wisdom is that reach is the most powerful planning dynamic to brands, and there's even a book out there suggested. Unfortunately, it turns out that book is wrong and not substantiated by its points. And we've actually done the research now that has proven otherwise. And a number of universities are starting to back us and support that work as they do their own independent analysis of our conclusion. So it's kind of the fundamental thesis of the MMA is to really work collectively for us to really do that. So listen, thank you to the Turkey and MENA board of the MMA. I can't thank you enough. The boards are the backbone of really supporting the membership to make sure we stay aligned to do the right thing for the industry. So thank you very much. Appreciate everybody. Have a great day. Enjoy your event. And again, next time, Melise, I'll be there. See you then. Take care, everyone.
Thank you very much for this inspiring speech. Now, we're going to be moving to another subject. We are talking about digitalization, and we usually talk about people who are used to digital world, who have been using digital world for a long time, like the youngsters among us and digital native people. But there are people who were not used to digital before. So at the COVID-19 times, it created some problems for them. In order to avoid that problem and in order to understand people who are not really into digital world, we have a session now which is called the Digital Literacy Project. And I would like to invite Ervin Altun, who is the MMA Business Development Director, to present the project details.
Good morning, everyone, and thank you for the introduction. Before I start talking about our social responsibility project, I would like to start with a video that shows our motivation to make an impact at the MMA. So this year has definitely been an unusual year for all of us. But being in the digital business, we're the lucky ones. We see rising digital numbers in terms of consumers and business. A study by McKinsey earlier this year stated that just about 6 weeks into COVID-19, we have vaulted more than 5 times in digitalization. So with this insight, MMA Turkey decided to act on it, as digital literacy became a really huge, important, vital aspect for all. And at the MMA Turkey, we decided to create a social responsibility project to raise awareness and educate for digital literacy. As the most affected age group, 65 plus, senior citizens sitting at home with very limited happenings and restrictions, we decided that our first social responsibility project should be geared towards this group. And this group needs education in terms of digital and financial literacy. So for this, with the help of our partners, members, sponsors, we have started the Digital and Financial Literacy Social Responsibility Project at MMA Turkey, which will be launched in January 2021. It would be a portal where our senior citizens will be able to come and get educations for their financial and digital needs. I would like to thank everyone who has helped us for this project and make this dream come true, if I may say. And I hope we can make more of these projects in our coming days in different verticals and in different geographies. If you would like to get more information about our social responsibility project or get involved with it, please do so. You can reach to us via our email or our social media tiles, which are down under our YouTube link. So thank you for watching us and your time, and hope you have a great day.
Ervin, thank you very much for taking and walking us through Digital Literacy Project. And I believe that this is quite essential for getting new people on board to the digital world, and especially making our subscribers and making everybody who's listening to this presentation now to be able to not forget those people ahead and try to actually put them into the ecosystem. And now there will be a session about business unusual category, which will be talking about banking and financial ecosystem. And I would like to invite Burcu Civelek Yüce, Executive Vice President, Strategy Digital Banking and Payment Systems from Akbank. Işık Akdemir Evlioğlu, Executive Vice President, Customer Solutions and Digital Banking from Garanti BBVA. Serkan Ülgen, Assistant General Manager for Retail Banking from Yapı Kredi Bank. And Fintech Istanbul co-founder İhsan Ergin as the moderator of the session.
Good morning, everyone. Thank you for introduction first. Today we are so lucky because we have lots of head of biggest banks, executive levels over here today, and we are going to talk about the old period and what's the next for the banking ecosystem. So actually we have a different period of time, you know. I didn't say the difficult, I say the different because of we have two sides of the chains. One of them is the digitalization of the customer face. It's really accelerating very fastly. On the other hand, we need an innovation for this because it's not the same of before. And also ecosystem management, partnership management, and also the collaboration and the competition concepts are getting more important than ever. And on the other side, non-financial corporates started to do something is in the finance industry. As an example, the super apps, the wallets, all the retail companies entering to the financial solution market also. So I'm going to start with everyone at the same time with the same questions, but I would like to ask first Yapıkredi Serkan Bey, because this time he's the only man in this panel. Usually I will choose the woman because she's going to be alone, but we are so lucky in Turkey. We have lots of executive level women in the banking industry. So the Serkan Bey, I'm asking the question about how is your view or take on these unique times in this period? Also, it's going to be same question for Işıl Hanım and the Burcu Hanım. So after the Serkan Bey, you can keep going. Yes.
İhsan Bey, thank you so much. Let me first introduce myself very briefly. My name is, as you said, Serkan. I'm responsible for the retail banking of Yapı Kredi. Actually, very quick information maybe about Yapı Kredi. Yapı Kredi is one of the oldest bank in the country, private bank in the country. We're in the market for the last 76 years. Actually, coming back to your question, what is our view? It's a very complicated answer to your question, I believe, because we're passing through very different times, as you mentioned. Not difficult, yes, difficult at the same time, but we saw difficult times before, but this time it's also very different. We were not used to operate in such an environment. As you can imagine, people are now visiting the branches less. Customers prefer to use the digital channels more. At the same time, their usage behavior, the banking usage of banking services behavior also changed a lot. First of all, during the first phase of the pandemic period, people were really scared, I believe. They were not going to branches, they were not shopping, they were just using the digital channels for their primary actions. So the activity level was very low at the beginning, but during the summertime, we saw a normalization period. It looked like everything went to the previous times, meaning that people start again visiting the branch, but still less, but much more than the first phase of the pandemic period. People start shopping. So we observed that the usage of the payment cards increased to the expected levels. But again, especially after November, again, we saw a change in the customer behavior. During November, again, the shopping was quite high. The loan usage was quite high. People were utilizing the investment products a lot. But again, starting from the December, we start observing that people start shopping less, doing less transaction, but still using the customers' banking services more than the first pandemic period. So look like this time people are not scared that much, but they took specific actions based on the nature of the time period we were passing through. I think during the winter time, we will see a similar trend, meaning that people will not be visiting the branches a lot. They will prefer doing their transactions more from the digital channels, but still the volumes will not be as low as we saw in the first phase of the pandemic period, actually. Of course, we took several actions to respond to the expectations of the customers. First of all, we enhanced our digital platforms to serve better to the expectations of the consumers. We put several different transaction types to our digital platforms to support the customers. Besides, we gave some additional opportunities to customers, such as free cash withdrawal from all the ATMs in the country, or we increased the contactless transaction cap volumes so that they can use their contactless card features more than before. And we didn't actually get the benefits that we provided to customers in the first phase of the pandemic period. We still provide those benefits, and it looks like we will continue at least until the mid of next year. So looks like we will operate in such a different environment in the next 6 months, at least 6 months. Based on the developments in the pandemic period, there are so many medicines or the vaccines that the people are talking about. We will position ourselves accordingly, but looks like the next 6 months will be very similar to the past 6 months or 8 months that we passed through.
Thank you very much, Serkan Bey. You set the scene of the industry actually very detailed. Now, Işıl Hanım, do you want to add something, this scene of the industry? Also, what do you think about these reflections?
Thank you very much. Hello to everyone. Also, let me first quickly introduce myself. My name is Işıl and I am leading customer solutions and digital banking in Garanti BBVA in Turkey. In terms of, these unique times, what I would say is, I would say something more at the macro level. Obviously, it had a lot of implications, as Serkan Bey was saying, on banking level. But I think for all of us, the most critical thing is customer behavior is not changing now in years, but actually in days. So we have observed that. We were always talking about trends, generations and so on. Now we had seen as of March that people could change their behavior with external factors in much an accelerated way than we would expect in the past. And that was also, I think, reflected on the business side as well. When you look at the companies, like when you look at education, even the restaurants and everything, they were so agile to adapt to this new system. So I think that's gonna be affecting the way we will be doing business, either it's banking or anything else, going forward. That's one of the key takeaways I would take out of this unique, difficult and different situations, I would say.
Oh, nice. So short, clear answer. Thank you very much. So, Burcu Hanım, so what do you want to add?
Thank you. Let me first introduce myself quickly as well. Burcu Civelek-Yüce. I'm responsible for corporate strategy, digital banking and payment systems at Akbank in Turkey. Actually, Serkan Bey and Işıl Hanım already set the scene. Maybe I might underline a few important, let's say, trends and changes that are emphasized during this, let's say, extraordinary, unique, whatever we would like to call it, different time period. Actually, this extraordinary time period has already had significant impact on all human behavior, our customers as well. We have seen fundamental changes in habits, ways of working, we haven't mentioned that, I guess, and business models. And this obviously will continue to play a further role, let's say, in shaping the future going forward. I believe the key driver of change in this era going forward will be creating relevant digital experience for customers. I'd like to underline the word relevant here more than the word digital. There is more to digital transformation than just transferring existing processes to digital platforms. It's very essential to design each process from scratch from the customer's perspective with all, let's say, digital capabilities in our toolbox. So this in a nutshell is how we position our experience design in our institution. And we have seen, going from this further, we have seen a very clear shift in our customers' needs in this period as well. And I might summarize these as three key trends. First trend we observed is the escalated push for a digital-first interaction model. Our customers tend to avoid physical contact, and they prefer to use digital channels for all their services. And for instance, the reflection of this, Serkan Bey already mentioned, but a few numbers, let's say, compared to the year end of last year, for instance, we have witnessed more than 20% of increase in the number of monthly logins to our banking app at Akbank Mobile. Considering the high volumes and the large customer base of our organization, this in fact is a substantial change. The second key trend in customers' needs in this period was the preference of one-stop shop service models. We have, for instance, observed a vivid example of this in our new functionality set of wealth management services on Akbank Mobile. We put them on our Akbank Mobile platform, and we started serving our customers of wealth management services as a one-stop shop. And number of, for instance, wealth management transactions on our mobile channel has doubled this year. And last but not the least, important, let's say, trend in customer needs in this period was what we observed was the rising importance of the content of our interaction with our customers as compared to the form of interaction, because we always talk about form of interaction, but generally we neglect to talk about the importance of content of interaction. What we observed, customers in fact appreciated more empathy and advisory during this time period. They valued human touch on top of having digital access to all services. So it just doesn't mean everything to, put everything on digital, but rather the human touch on top of it really meant a lot, and we experienced it quite vividly. They also expect us to adapt to changing environment very quickly. This brings us to the discussion of speed of change. I think what we learned during this time period is speed of change is without, of course, compromising from excellence on customer experience. The speed of change will be more important going forward, I guess. So in conclusion, Ihsan Bey, it's safe to claim that we are going through times that will shape the future. And I think companies will, in fact, define if these behaviors, these new, let's say, imposed behaviors, if they will prevail or not in the future on customer side by offering a good experience to incentivize this change, I guess.
Yeah, thank you very much. Actually, it's so clear the customer behavior change very strongly, but I can see from outside of the industry, technology enabled everything, you can do it. The APIs, the cloud systems, and all of the technology is ready to help you to adapt with this change. Also, at the same time, from the government side, I can say that because I have in some of the committees of the government helping them to development plan. So the open banking regulation, QR code regulation, so government is supporting this change also with the regulations. I can say that. So as you mentioned, that business model is changing right now. Based on that, and you mentioned that the customer face, the UX, the other things so important. So coming to the Serkan Bey, can you give us more insight about your customer activities? Because Burcu mentioned about the customer side. To enhance customer experience, what changes are you experiencing in the customers with fast digitalization?
Ihsan Bey, actually, you pointed out a very important point, the regulations. The thing is, the Turkish regulators were very active, especially after the first days of the pandemic period. And they really supported the banking industry in terms of transforming our business model to get aligned with the expectations of the customers. For instance, we have around 1,500 people in our call center. It took us to around 2 weeks to send all of our agents to the homes with all the infrastructure they need to continue serving to the customers. So normally, based on the regulation, there are so many limitations, but based on the discussions we had with the regulators, we got the permissions and the required, let's say, written regulations, so that all of our agents start working from their homes in 2 weeks. Also, the same thing is valid for our branches. I mean, we have around 8,000 people working in the branches. Majority of them had an iPad before to serve outside of the branches to the customers, but there were some portfolio managers not having these iPads. So in again 2 to 3 weeks period, we provided their iPads so that they started providing the service through their at their home to the customers. So I mean, again, during that period, the regulators help us a lot. Besides, there were other regulations that supported the transformation, like the increasing the contactless payments cap rate, or let's say the cap amount. It was around 120 TL, let's say around like $15. Now it is around like $30, let's say, around $30 in Turkey. Besides that, as you mentioned, there is a QR regulation. There are upcoming open banking regulations. So I mean, the business model is transforming. Regulators are understanding the needs of the customers, which is very important, I believe. And I think the most important point is the banks were ready to such a transformation in the country, including all the big banks that also today having talks in that session. So I mean, yes, we spent so much time to transform ourselves. It was not easy. For instance, for Yapı Kredi, we took more than 400 different actions specific to the pandemic period. And still, there are many projects ongoing to enable us to get used to that period. So yes, it's difficult, but again, I think the point is it's a different time. We need to be more agile. People think differently. For instance, another point I think which is very important for Yapı Kredi, it was impossible for us to think that 7,000 headquarter employee could work from home. I mean, we were discussing this concept for several years, but we couldn't take an action. But in a single day, we decided to send people to the homes for working. So,
yeah, I have a big question about these buildings. You know, all of the banks has the big plazas, and also in the Gebze side there are big campuses. I always.
Yeah, I mean, let me give an example. I'm in the plaza. I'm in the headquarters now. In my floor is around 400 square meters. I'm the only person in the floor now. So I mean, think that it's such a investment at the end, but the utilization is very low. Normally there are around 1,500 people working in this building, but I look at the number this morning. There were only 100 people in the building, including all the security guys. So I mean, the way of doing the business changing. That's definite. And last sentence is about the customer behavior. At the end, what we invest, what we explore, this people are more concerned about their budget management. This is very important because the economy is having difficulties. People are having difficulties, of course, and people are more concerned about their budget management. And in the marketing activities that we provide, that we run, let's say, we consider it and we try to provide much benefit than before. so that they can manage their budget better than before. At the same time, we're trying to educate the customers about how to manage their budget better. So this is also very important, I believe. And it's a very primary expectation coming from the customer. So in that respect, we're trying to position our marketing activities.
Thank you very much. Actually, Burcu mentioned about the customer behavior change, and we go the deep side of the what can be the customer experience with Serkan Bey. Now, I would like to continue with Işıl Hanım actually to the marketing side of this, because we are still in the customer. So face of the changing face of the marketing. As I understand, of course, this digital economy is booming, so it should be changed the marketing strategy, but also this open banking issue, working with the third parties is coming on the game. So maybe you can mention something about that. Is it going to affect your marketing strategies? Maybe no, maybe yes, but if you add that also, which is going to be great.
Sure. So basically there are two critical trends, as you are saying. One is around digitalization, but the implication of digitalization around data and AI-based tools, machine learning and everything. And the other is about open banking, which is the changing ecosystem of banking industry. So they merge at the end of the day, but they have different implications as well. When I start with digitalization, so digitalization means more data with us. That's the major thing that's changing on our side. And a few years ago, actually in the bank, in BBVA, we started an initiative around data. And the reason was about the way we're going to be serving our customers going forward. And we called it initiative Trust Circle. And what it means is, data is very critical. And your customer actually leaves data with you. The more they transact or the more they interact with you. And to create that interaction, they need to trust you. They need to work with you. So it is kind of a self-fulfilling prophecy, but it's like if the more they interact with you, the better insights you can provide to them through the tools that are available. And then at the end of the day, they are happier with you, they trust you, so they interact with you more. So it's kind of the vicious circle. And the major tool behind this system is leveraging data through your AI-based solutions. And this is what we had been investing a lot in the last few years to use AI-based solutions to provide insights and financial advisory to our customers. Burcu was mentioning about the importance of empathy and advisory during this period. And I think it's going to be more and more critical going forward. Because at the end of the day, up until a few years ago, I think banking was more about selling products, but it's going to be more about providing consultancy and financial advisory to our customers. In that respect, we are focusing on three dimensions about providing this financial advice. One is about being real time. So normally, we were processing data, we were uploading batches, coming up with campaigns to our customers and so on. Now it needs to be real time. At the time the interaction happens, we need to be ready with our customers by understanding their needs, their problems, issues, whatever it is. Then it needs to be personalized. In our bank, we have 2 billion interactions on our digital channels in a year. So that means 2 billion different reasons to come to our platforms. So at every time, it needs to be personalized to that customer about that interaction when we try to provide or offer something. So it needs to be personalized. It cannot be generic anymore. And the last one is proactive. So we shouldn't wait for the customer if we are going to be a financial.
Işıl Hanım, I think we have some issues with the internet, I guess, at the same time. Everybody's agree with me, right?
Yeah.
Yeah, we can't hear.
Yeah, we lost Işıl Hanım.
Sorry, I'm back.
Yeah, you came back. Last sentences of you, we couldn't hear that.
Okay, so I was saying being real time, being personalized, and I think we were at being proactive. We need to be very proactive with our customers. We shouldn't be waiting for our customers to come to us, but we need to be going to our customers with advice or consultancy that we would like to provide. So I said machine learning, AI-based tools are critical. What we are also investing is on behavioral economics. So there is the human part of it. So this is more the data part of it, but the human and empathy part is still very critical, and it's going to be the game changer, in my opinion. So we invest on behavioral economics to understand the customer drives and customer implications. And in our ecosystem, that means doing a lot of A/B testing. So we define the trends, we try to understand the segments, but then we do a lot of A/B testings to test those insights on the customers on the different segments. So going forward, this is going to be an ecosystem of providing financial consultancy to our customers. And this is going to be through the tools, using the tools of digitalization, which is AI and machine learning. But then behavioral part, which is the human touch, is going to be more and more critical. Coming to the ecosystem, in this financial advisory world, with open banking, actually, we are extending and expanding our ecosystem with other industries, with other platforms. And going forward, I think that would also help on this, financial consultancy world that we would like to invest on, because then you are going to be able to provide more sophisticated, but to the point solutions to your customers, both on retail and on the enterprise side. With the partnerships that we can do with different players in different categories. So I believe the banking environment will be more a partnership-related ecosystem going forward.
Nice. Actually, the last part is important. If you are really going to do that, the partnership, which is going to be great for the Turkey, because the Turkish ecosystem has a really good fintech ecosystem also at the same time. I know that bankings are very strong in Turkey. Maybe some of our participants right now listening to us, they don't know what's happening in the US or Europe. Their banks are not similar to us. Our banks are really, really far away, better than that in the digital experience and other issues. So the partnership part, if it's going to work, we are going to be really, really strong country about it. Actually, coming to Burcu Hanım, we have talked about lots of chains. We have talked about, the AI, machine learning, customer marketing, so all of them, we need innovation more than ever. So the innovation part, we heard that Akbank doing lots of things, and we can see that. So can you share some insights from your innovative projects also? How is innovation shaped and affected with this process? So what are you planning also, not for just for today, but for future? And maybe you can add something for our last question following on that. What do you think about the future of banking after the innovation? Can you give some ideas about that?
These are all quite interlinked, actually.
Yeah.
In fact, apparently we're talking about a very radical business transformation here. And we actually believe the two prevailing cultural components that are very necessary are innovation and design. So these two cultural components we are very keen on, and we believe these will have the impact to make this business transformation real. Excuse me?
It's not from us.
Okay. As opposed to the digital-born companies that we're talking about here, this trait of focus on innovation and design is not always abundant in incumbent players in industries such as ours. So with this thought in mind, we were very rigorous in creating a culture of innovation. Since you focused on innovation, I'm going to focus on innovation as well, rather than design. And we also had an organizationally iconic unit that played a key role in our journey in this. And this was our innovation center, Akbank Lab. We established Akbank Lab back in 2016 for building sustainable relationships with the global fintech ecosystem and also driving innovation initiatives continuously within the organization as well. How do we do it? We follow a very rigorous gated innovation process. In fact, we built this process and cultural components all together with global experts in this area back 4 or 5 years ago. What do they do? First, Akbank Lab team and all business units agree on, let's say, a theme. And on this theme, they define and agree on a minimum viable product to begin testing. I think Işıl must be right about this. Testing it was not the, let's say, strongest point of banks in the past. But this rigorous testing, trying and failing or continuing this concept, this culture is very crucial. So Akbank Lab team and business units first define what to test, and then they work with either internal or external partners to develop an MVP and start proof of concept, POC. If all goes well during POC, we move on to developing the final service. If this flow, in fact, gives us the opportunity to test and see if innovation projects will work or fail. This is, in fact, how fintechs work, how digital, let's say, born companies work, and it enables us to be more flexible in driving innovation as well. Meanwhile, in fact, not just doing projects, developing projects, but in fact, having being a part of the global startup, fintech, and relevant third parties ecosystem is more crucial. So our goal is not limited to developing projects. We aim to be considered among the top partners of choice that global fintechs want to partner up with. So this is again a cultural transformation. This requires a cultural transformation, how we work with fintechs and startups, etc. And I might also give you some numbers as well. Until today, we initiated nearly 20 innovation projects in Akbank Lab, and half of these initiatives are currently live. And some of them had really huge impact. I mean, these are not like peripheral projects. For instance, to name a few, we have a personalized communications area in our mobile app where our customers view smart, hyper-personalized insights through use of AI. And these range from, let's say, monthly expense analysis, cash flow predictions, I mean, anything that could shed light on our customers' financial lives and to present relevant solutions when they need. It's more than 40 different scenarios and more than 20 million hyper-personalized insights on our mobile platform. And this hyper-personalization project, for instance, started as an innovation project at Akbank Lab. Another impactful project of Akbank Lab, for instance, was the development of machine learning algorithms in our credit decision models. And we did it, for instance, together with a Silicon Valley fintech. Yet another example was on efficiency, robotics process automation. Akbank is very well known for its, let's say, extreme efficiency, but through use of scaled, let's say, RPA, we achieve even more efficiency. So it's like you can in fact utilize innovation culture and innovation projects to drive different, let's say, different aspects, like, for instance, improving customer experience, driving efficiency, or the analytical models behind that you use to, improve those models. So you can use innovation on every front, and it can have a huge impact on business results as well. So we also believe that innovation culture in our organizations needs to be reinforced continuously. Therefore, Akbank Lab has the function of boosting cultural push as well. There are numerous tools you can use for that. It's like innovation competitions, extensive trainings, hackathons, newsletters, feeds, etc. So this is in fact a holistic and a very huge initiative for cultural redesign. This is how we perceive innovation and how we in fact implement innovation in our organization. You also asked for future of banking, and I really cannot agree more with Işıl Hanım on the importance of open banking, artificial intelligence. I'd like to just shed a few, let's say, a little light on how I see what I see as the game changers for the future of banking in our country. There are, I think, 3 of those that are prevailing and that are very crucial. The first one is the positioning of fintechs. Fintechs offer numerous innovative solutions from payments sphere to insurtech, regtech, I mean, wealth management, loans, etc. Their solutions improve customer experience radically, not let's say incrementally, but radically. They are generally faster than big incumbents. These all enable them to create products and services very quickly. They respond to changing business environment very rapidly. So therefore, as Akbank, as most of the institutions in banking industry in Turkey, we consider startups and fintechs as potential strong partners in creating added value for our customers. So this is one key issue, positioning of fintechs, how we see fintech. The second game changer to mention in this respect is, I definitely agree with Işıl Hanım, is open banking. With open banking, banks will be able to reach a larger customer base with more personalized services. Banks will be able to broaden their customer touch points through API integrations and partnerships, as you mentioned, and they will offer services not just from their own channels, good old channels, but also through other interaction points where customers spend time or need financial assistance and solutions. So partnerships, integrations, so important. And the third big game changer is use of artificial intelligence. Otherwise, it won't make any difference. We think AI is the key to solve the dilemma, to balance between the needs of customers and companies. We don't have to balance between the needs of the customers and companies. We can create value for both at the same time through use of AI. So this is crucial. And I think these three game changer trends have impressive interactions as well, especially the interaction between open banking and AI, big data, is so crucial. Open banking holds the potential to increase data sharing across different industries. That's very crucial. As banks get to know their customers better as a result of cross-industry data sharing, they will be able to offer new, innovative, and more personalized products to their customers. And this is so important, I think, for the future of banking in our industry. I guess future of banking holds very exciting developments. So I'm sorry, maybe I was just too long. I get excited when we talk about future of banking in our country.
Actually, the future of banking is so important, but of course we are talking with the bank, so they are always talking about in their ecosystem what's going to be happen. But when I say the future of banking, I'm not just only asking future of banks, I'm asking the banking. So, the banking is maybe the outside of the banks in the future. I'm the little bit represent the other side of the banking ecosystem, like a fintechs and the scale-ups. So that's why I'm asking this issue. But it's a good.
Well, that's why open banking is so crucial.
Yeah, sure.
This cross-industry integrations. That's why I guess it's worth a mention.
That's right. So I'm passing to the Serkan Bey, then the Işıl Hanım, asking the future of bank question to them also. What do you think about the future banking? Maybe you can try to emphasize other sides of, open banking, very well explained by Burcu Hanım and some of the other issues. But what else do you think about the future bank or future banking will include?
I think Burcu summarized the story quite well. I mean, at the end, the fintechs are very focused on specific areas so that they generate new channels for the banking industry or at the same time. So collaborating with the fintechs will create new channels for the banks so that we will be able to reach new customers at the same time. And at the end, we are big organizations. We are not that agile to concentrate on especially niche areas. So I think the collaboration is inevitable. I mean, of course, the technology, progress in the technology is supporting us. At the end, we're talking about AI technologies, also the regulations, open banking regulations. These will help us to collaborate better than what we were expecting before. Because
Serkan, can you, I'll remember that, can you mention something about digital onboarding also, whenever it's okay? You can mention digital onboarding.
Good question. But what I'm trying to say, I mean, 3 years, maybe 5 years ago, maybe we were afraid of having partnership with the fintechs. We were more talking about how to compete with them. But now I think the mindset of the banking industry is changing. Actually, it already changed, I believe. At least for Yapı Kredi, it definitely changed. We need to collaborate because again and again, there are 83 million people living in this country. We cannot provide all the services that the customers need. So we need to be clever enough to cooperate with the fintechs that target specific areas. At the end, the banks will be operating in their main line. They will provide the principal, let's say, banking services to their customers. But at the same time, we need to find a way to collaborate. As you mentioned, at the same time, we're trying to gain new customers, onboard new customers through our digital processes. We find it very critical, especially during the pandemic period. What we observed, there are many customers want to work with us, but since they cannot go to the branches due to many different reasons, due to the limitations, restrictions, due to health concerns, now we see that people start preferring the digital onboarding process much more than before. Actually, we provided that service 2 years ago, but the demand was not that high those days. Of course, there were some customers using that service in order to be the customer of the bank, but especially during the pandemic period, we see it as a big opportunity both for the bank and also for the customer to make it much easier for both parties to increase the volume. Actually, I don't think there is a need to get into the technical details about how we onboard the customer. But the thing is, at the end, there is a video chatting process behind that. Again, it was something that we developed ourselves, but at the end now, the regulators are trying to figure out how it should be in the regulation set. This is something that we're working together with the regulators to make it more clear for everybody.
Nice, very well. Işıl Hanım, what do you think about the same subject, actually, the future of banking? Do you want to add something in the different approach?
Maybe I add one final perspective around, what will happen on the physical side, because we talk a lot about the digital world. Mm-hmm. And I think with pandemic, one of the critical changes we had gone through was about the full digital experience. Because when you look at our experiences, it is always somehow backed up with a branch experience, with a physical experience, or it is a combination. No? And it's also one of the reasons I think we felt the need more and more for digital onboarding. Because even today, the digital onboarding we designed finally needs some branch touch at a certain point because of the regulatory requirements, but it is going to be changing soon, hopefully. Even then, I think when you look at the model in our branches, I think most of us had gone through the similar experience where we convert our branches more to an advisory point than a transactional point. So when you look at the number of transactions going through our digital channels, it's tremendously increasing with pandemic even more. And we have less and less transactions happening in the branches, but more and more financial advisory taking place. So that physical touch point is going to be more critical. Again, about the whole model around this financial advisory, having that one-to-one relationship and interaction in the moments of truth of, critical things from a customer's perspective. And in terms of future of banking, I think we had taken those actions a few years ago. When you look at, let's say, Garanti BBVA branches, normally in the past, we had a teller and a seller in the lobby area, we call it. Now we have one point of contact helping you for everything when you come to the branch. If you need to pay your credit card debt, or if you need to take a loan, if you need to do something with your account, it is the same person who is helping you to understand you as a customer and then to help you and to advise you. So that is going to be the last piece of change, because as the banks, we have still hundreds of branches and it will go like that. And then the role the branches will have is gonna change because of the whole change in the digital environment.
Clear. Burcu, do you want to add anything else about this issue?
Yeah, actually, I talked quite a lot, but I think it was great. Işıl Hanım just mentioned about the physical world as well. I guess we need to make the, let's say, boundaries between physical and digital channels disappear. We should make them invisible to the customer. That's where I guess we have homework to do. That's what we try to do in our phygital branches, physical and digital branches, where we in fact integrated mobile experience, digital experience inside our physical environments. And this is what we need to do on payment side. This is what we need to do on digital experience side. So the customers shouldn't feel like this is a different, let's say, environment when I'm on digital, and this is a different environment when I'm in physical. So this is I think, as the banking sector, this is our homework. I might add this.
Good point. Actually, from my side, if I look to the old industry, I can say three main things. I just try to maybe give a different approach. One of them is maybe the big banks like you, but most of the banks going to be more focused on the banking as a platform product to work with the third parties. Banking as a platform is really increasing out of all of the world, but in Turkey, we have really strong banks. So maybe we need some tier 2, tier 3 banks focus on this banking as a platform products. The second thing, big banks like your companies, they are going to be, I can see it from out of Turkey, maybe same in Turkey, focusing on being a super app, which I'm trying to say that they are trying to do the transactions like e-commerce inside of their apps. They are trying to move from the bank to the e-commerce company or enable to do transactions through their super apps, because they think that I have 20 million, 30 million, 10 million customers. So they are using my financial products to do these businesses. So I'm sure we will see more e-commerce banks in the next future, in my opinion. And the third part, support with the fintechs. I can see that non-financial corporates like retailers, as I said in the beginning of our panel, will be finance companies. They are deliver the financial products to their customers, like their loans to their suppliers, like invoice financing, also their dealers. So for their dealers and suppliers, customers, they are going to be a fintech or a financial company helping with the fintechs and the banking as a platform. So corporate's going to be come to the game, I can say. So if you guys, Serkan Bey or Işıl Hanım, because I asked Burcu Hanım, do you want to add something after my maybe 3 points? Do you want to add something? And or Burcu Hanım, again, you have a chance to add something about my opinions. If you don't have, this is my questions actually.
İhsan Bey, you're right. I mean, the banks will continue changing. As we saw in the retail business, retail players are trying to provide some financial services. At the same time, banks will be maybe providing such retail services to their customers in order to provide better super app approach. You're right. The environment's changing. Many of the sectors are converging to each other, I believe. There is such a trend.
Thank you. Thank you. So, Işıl Hanım, Burcu Hanım, are you agree with me? I would like to hear that.
Yeah, definitely. Yeah, I would agree.
Yes, I think we tried to explain that in the previous questions with the ecosystems changing.
Yeah, maybe to the point of the invisible banking. It's to the same point. Thank you very much. It's really, really informative, inspiring, and also a good explanation of the history and what's happening and what do you expect from the future of this ecosystem. Thank you very much.
Thank you.
We thank you.
Thank you.
Thank you. Thank you very much.
Thank you for all the shared insights and thoughts about business unusual in financial industry. And now we are moving to the next session, and I will be inviting Erdem Tolon, this time with his Kantar Media hats, to the stage once more to share with us 2021 media trends and predictions.
Hello everybody, this is Erdem Tolon from MMA Turkey, and also I'm part of Kantar Media family, and I've been in the business for more than 15 years. I think during the last 15 years we made a lot of presentations about digitalization, mobile first, and all the other events related with digital transformation. But we never talked about COVID-19, a disease like COVID-19 and its effects and outcome on every aspect of our life. So it didn't just affect consumers, it affects all businesses. And it has been a challenging year for all of us, and I would like to thank you very much for attending to this session and also to the event, MMA Impact event. And we are very happy to be together with you and hoping that next year we're going to be having this presentation face-to-face as usual. So today I'm going to be talking about Kantar Media Trends and Predictions reports. And what is this report? We are actually talking about three themes around the media sphere, which is the media pivot, where industry changes are forcing a change of direction or approach. The second part of the sphere is media performance, obviously, where the increased challenges of measurement and effectiveness are addressed. And then we're going to be talking also about media people, which is covering audience, data, and also marketers. So I would like to just talk about what we do as Kantar, because some of you might not heard about us. So we work with clients at the planning stage, measurement stage, and in the end, evaluating the outcomes and thinking towards the future. So we are covering all the life cycle in media. So we start working with our clients on before the campaigns, during the campaigns, and after the campaigns, and try to talk to them about strategy, their activities and outcomes to be able to deliver more added value to their communication plans and media side. So let's start with the Kantar Media Predictions and Trends report. So the report has been designed in order to actually show you what's going on in the markets all over the world. And then we're going to be talking about our predictions about these new changes. So as we all know, life has changed beyond recognition for consumers in 2020 due to COVID-19 especially. And brands and organizations need to understand which changes are here for long part and which of these changes are going to be for short term. In times of change, how long term can their media strategy and planning be for the organizations, and how will these changes stick or twist? So we're going to be actually talking about there is a big change and it's going to, and people and all the organizations are taking action, but is it going to stick or is it going to twist? So we see that the trend now is claimed in-home consumption grew and consumer confidence fell. So if you look at our report for global report covering 30 markets, what we see is that in April alone, we saw internet browsing increase by 64%, online video by 44%, and higher social engagement up by 56%. Meanwhile, consumers were increasingly concerned about their future and worrying about the economy. 77% had felt or expected to feel an impact on their income, which is obviously not quite positive. And during the COVID-19 period and afterwards, what we see is that there is a drop in the advertising investments. But of course, the composition of the growth in the advertising spend is different for each category. But for instance, if you are a part of a cinema industry, most probably you are having very bad times in COVID-19 period and upcoming period because, for example, in Turkey, cinemas are closed at the moment. And if there is no cinema, there will be no investment to the cinema. So it changes by medium, but we see that a majority of the advertising world has been negatively impacted by COVID-19. So what we can say is that this effect of COVID-19 will depend on audience, media, and category. So in our report, Brand Z report provided by WPP, we see that strong brands are going to recover quicker because of the investments that they have been doing during the pandemic. But while it's unlikely the pandemic situation will change quickly, consumer behaviors are starting to return to old normal as we emerge from stay-at-home restrictions. So what we can say is that the stick or twist will vary by audience, media, and category. What's key here is flexibility and agility. Despite all the challenges, media owners channels have partnered with agencies and brands to deliver the flexible and agility. In UK, for instance, what we have seen is that two major broadcasters have adapted their way of working with advertisers to offer more flexibility, like canceling all late booking fees and also canceling 4-week deadline. So in order to actually survive in an environment, in order to actually sustain your business in a challenging environment like this, we believe that flexibility and agility is an important part. So when during COVID-19 period, I think many of you start watching more series at home, and you start spending too much time on subscription video on demand services such as Netflix, Amazon Prime. Actually, for example, I have 4 SVOD services in my house, and I'm actually jumping from one to another. And of course, it's, I think, common for majority of the audience as well. But what SVOD has increased immensely, but consumers start seeing SVOD platforms as interchangeable. So the boomerang consumer has emerged, and securing long-term loyalty will need to be priority if the subscription business model is to be sustainable. So let's look at the SVOD numbers. Before that, I want to be mentioning a couple of highlights from the industry. For example, Quip sets a shutdown date, which is an SVOD service, and you might believe that it is strange, right? In an environment where SVOD is increasing to high, Quibi is setting a shutdown date. And Disney, for the first time, they actually put Mulan in their Disney Plus pivot environment. And also another thing about Netflix is that Netflix subscriber growth slows, and there's a competition between all SVOD players. For example, what we can say is that some 74% of SVOD subscribers mainly watch new series. But with content now available across multiple platforms and a finite amount of consumers are willing and able to spend, they increasingly need to make a choice, increase their number of paid subscriptions, switch from one provider to another, or dip in and out. So we can see that there is a competition now running between SVOD players. And what's going to happen is that the content aggregator will take the center stage. Bundle these already account, for example, for 18% of all new UK SVOD subscriptions. Already partnership of Sky with Netflix and Disney Plus with O2 in UK, for instance, we believe that this is essential for the new customer acquisition funnel. With more platform launches like Paramount Plus to come, content spread thinner, and global recession in progress, this trend will accelerate in 2021. And the other prediction that we have is that partner commitments from subscribers must carefully be judged, as often these mean fewer options to chop and change. Nothing drives down advocacy faster than a consumer's needs being unmet and no easy exit. This is actually no longer a winner-takes-all market, and collaboration will be essential for long-term success. In UK bundle, these account for 18% of all new subscriptions in Q3 2020, a significant and growing proportion of new SVOD signups. So what we can say is that SVOD is growing. You might be part of a growing environment, but be careful. Competition is increasing, and you need to, again, think of alternative ways to get your audience and to actually create loyalty in your audience. Another aspect of COVID-19 was, and hype happened, was in e-commerce, of course. And COVID-19 actually accelerated double-digit of e-commerce growth globally, with new consumer behaviors emerging. Some 50% of consumers are less inclined to shop in person this holiday season, for example, but 40% are more willing to shop online. These shifts requires brands to alter their strategies. So e-commerce business models have diversified in 2020. In USA, for instance, 50% of shoppers discover their brands on Google, and 63% visit Amazon or Walmart.com for initial product research. Given the lockdown in all the countries, we project that online to offline business in China will grow by 64% by the end of the year, with grocery growing at more than 100%. So new e-commerce models are growing rapidly this year with lockdown measures, meaning consumers spending more time online, browsing through social media and video apps. So what we can see is that, for example, TikTok is now working with, have created a platform called Shopify. Live streaming. Alibaba and Amazon have launched their live streaming through Taboola and Amazon Live respectively. Small brands and those targeting youth market use content platforms and social networks not only accurately target their audience. Influencing consumers across the sales funnel is going to be important towards a more efficient omnichannel media presence. So what's next? The new market dynamics will make it possible for small insurgent brands like Perfect Diary to grow and capture share from incumbents. To counter this, the incumbents need to be more agile and utilize their community-powered platforms like Facebook Shop and which has social e-commerce in conjunction with influencers during promotion periods. Brands also need to reimagine direct consumer with an omni strategy to provide the right consumer experience. So another trend that we have been seeing is that, I think all of you has been seeing, is that importance of being together. And this is what we call the audience in the stream. Investment in how people are consuming content is no longer enough. It's crucial actually is to understand the audience behind the screen too. So we believe that the audience is always in the driving seat, and TV has always aided togetherness, but households spending more time together during stay-at-home period measures meant more watching TV together, delivering an uplift in all TV and video viewing. So what we can say is linear and digital or SVOD or BVOD services together consumption of these platforms together has increased. So we have an example from Norway. For example, in Norway, linear co-viewing increased from 50 to 52%. A broadcaster player co-viewing from 57 to 68%. And Netflix actually increased 10% uplift in home co-viewing on a TV set to 56% during lockdown, while YouTube co-viewing on a TV set increased from 32 to 36%. So actually, we see that staying at home and watching TV together has actually aided both linear and also digital viewing. But we can see that there is an increasing competition as well for the audience share. Some 24% of Norwegians aged between 20 to 49 watch content on broadcaster players. Netflix and YouTube across an average week in May. Although this is actually a huge number, what we can see is that 25% intersection is a big amount, and there is an increased competition between not just linear, but also video on-demand services. So what has to be done? I think it is important to understand viewer migrations. So the media companies need to understand the totality of TV and video audience together. And we believe that media trading currencies must reflect the reality and totality of audience behavior. Content providers and platforms must work together in response to changing environments. And measurement across all screens and platforms must be taken serious to understand viewer migrations. With increased competition for viewers, limited time, and wallets, all content providers and platform owners will find richer value in total view of their audience. With media consumption habits shifting dramatically and many media budgets shrinking due to COVID-19, where should advertisers place their ads to maximize effectiveness? So the next topic that we're going to be talking about is differentiation in your media mix. The volatile media landscape has left advertisers with agile mindsets as they entered 2021. So let's look at some numbers. The volatility in the market has led advertisers less confident, and for example, only now 49% is confident, which was 56% in 2019. But it's still a dampening enthusiasm for change, with many marketers, around 53%, now are willing more to try something new. 96% of the markets believe the pandemic will have long-term strategic implications, primarily with the increased focus on campaign effectiveness and more investment in digital media for greater agility. Within smaller budgets, digital media channels are winners in relative terms almost to all online media formats. So, and the latest developments in digital contests should appeal to advertisers, with TikTok, Instagram, Snapchat being popular advertising environments for consumers and delivering exceptional brand building experience. So what we can say is that there is a big quest for now differentiation in your media mix. And what we can say is that accelerating adaptation of your latest channels and formats by brands and agencies is important. There will be continued growth in proven online video formats, and brands will increasingly take responsible media investments. The other aspect of COVID-19 was, since digitalization have emerged immensely, we believe that building an audience relationship in a digital-first world is a must. So there is a social dilemma going on. The industry is focused on offerings revolving around social media and building relationships with a wider set of influencers, but with a clear trust gap among consumers, trusting the news and information they see in print, far more than social media. Is this the right approach? Is the question. So building relationship actually is a huge effort. Campaigns are strongest when they reach across channels in a believable, consistent way. So what we can say is that brand investments in social media channels continue to grow, up to 26-30% story format investments in 2020. And there is this thing going on, but only 75% of consumer touchpoints coming from outside the paid media sphere. Social media alone won't build a relationship with your audience. Campaigns are strongest when they reach across multiple channels in a believable and consistent manner. So we believe that emerging social platforms will become more important. Influencers will become a long-term strategic opportunity, but not a short-term tactic. And brands will become more dynamic and open-minded in their media and comms planning. Another reality that we might be facing is it's not related with COVID-19. It's been told, I think, more than 2 years now. Tough cookies. The realities of a cookieless world is also going to be actually impacting our digital world. So as digital ad spend becomes more dominant, we need to consider how we're going to target and measure if there is no cookie around. When we look at our reports, when we look at our analysis, we see that there is a great concern going on for the cookieless world coming from industry leaders. For example, most especially among media owners, 65% of the publishers are worried. 48% of marketers worry their companies won't be able to provide impactful performance without cookies, and 40% indicate that their companies are preparing for this, while 54% of consumers are conflicted, and 54% of the consumers like tailored advertising tailored and targeted to them, which are relevant, of course. 56% are concerned about their privacy. So what's coming is a new hybrid world of ad effectiveness measurement. Direct integrations will enable privacy compliant solutions. So direct integrations with publishers can gather exposure data on permission panelists in an anonymized and privacy compliant way where possible. But where publishers aren't ready, validated probabilistic and analytic based modeling at scale will fill the gaps. So on the measurement part, there will be, without the cookieless world, there will be more dependency, there will be more need on the analytic-based modeling. Major platforms will continue to offer their digital effectiveness and targeting solutions based on their own siloed data, but this won't answer advertisers' questions in a holistic manner. Meanwhile, we see smart alternatives to targeting avoid cookies together, contextual targeting, time-based targeting, and using syndicated and custom audience, for example, is going to take a hype. This requires strategic thinking and testing, of course, and careful attention to formats and creative customization by platform. It also requires flexibility on measurement partners' part. So I've been, for the last 15 minutes, I've been talking about media trends and predictions. We talked about boomerang subscribing, where there's going to be a big competition between SVOD providers, and there will be some new changes in business models. Audience and stream togetherness has grown in importance during the pandemic, boosting TV co-viewing with SVOD or BVOD. Social media dilemma. Brand investments in social media continue to grow despite consumer distrust. Brands will become more open-minded and dynamic in their media and comms planning. We talked about e-commerce and media. Are they friends or frenemies? Social media influencers will influence consumers across the entire sales funnel, guiding them to a more efficient omnichannel presence. Brands need to reimagine their D2C strategies to integrate influencers and community-powered platforms. We talked about tough cookies. Without cookies, how are we going to measure? Digital ad spend is becoming more dominant as the demise on the third-party cookies looms. Advertisers will move towards hybrid ad effectiveness measurement, which is going to increase more attention to analytic basis analytic forecasting. And there are more trends in our report. And if you'd like to learn more about it, please contact your local Kantar representative, and they will be more than happy to give you the trends and predictions report. Since I have 15 minutes, I will just talk about some parts of the report where I believe is about publishers, advertisers, and also marketers. Thank you very much for listening to me, and I'm hoping that you're going to enjoy the rest of your day. Thank you very much.
Erdem, thanks for the sharings. Now the next session is all about the changes in the digital world. Because over the last year, especially this year, we have seen a lot of changes in the digital world. And we are all observing that search is not enough. So our next session is about the changes in the nature of the digital world. So we are all aware of that search is not enough. Earlier we were finding the products, but now products are finding us. And our needs are forecasted in beforehand. About that, Discovery Commerce, now it's time for products to find people, is the name of our next session. And I would like to invite Michelle from Facebook to give her speech.
Thank you so much for the introduction. Hi, everyone. Welcome to Turn On Discovery Commerce by Facebook. My name is Michelle Ngayeb, and I'm Product Marketing Manager for the MEA region at Facebook. And thanks again for taking the time to tune in today. And we're going to talk about the changes that we're seeing in the commerce space and the rapid acceleration of the digital first shopping behavior, as well as ultimately digital businesses. So we will also dive into how you can use Facebook to its full potential to turn desire into demand, drive discovery for your product, services, as well as growing your businesses across our family of apps. Just before we dive into the commerce specific product and ecosystem within the family, Facebook family of apps, I just wanted us to kind of put things in context and look at the evolution of shopping throughout history. And as you know, for hundreds of years, shopping was a relationship initiated by a person's needs and actually fulfilled by shopkeepers' expertise. And typically a shopkeeper in a traditional store could offer personalized recommendations, a store experience to create moment of discovery, and a simple exchange of payment and goods. So essentially it started with, it's all about human connection, and it's been like that throughout history. So again, to continue on this history timeline and looking at the transformation of online businesses, so pretty much anything that is born and raised online. So in the late 70s and early 80s, the industry began to turn to the web as innovative manner to sell and transact with people. And so electronic commerce was born and named. Early e-commerce experiences try to replicate, so it was all about replicating personalization, discovery, and the seamless nature of an in-store shopping experience online. And essentially some businesses were more successful than others. So basically e-commerce was more seen as something experimental, and it was dwarfed in comparison to offline sales. So basically it was just trying to mimic that offline sales online. So businesses were not really set up for this kind of fulfillment and the whole engineering and machinery that requires a solid e-commerce infrastructure. And the financial tooling was also pretty limited. And then the infrastructure began to form, including the rise of search as the killer app for web. And this transformation actually really accelerated in 1995 with the launch of eBay and Amazon. So essentially, search has dominated the playbook for the last 30 years because it's very functional, it's utilitarian, it's price-driven, it's measured by transaction. So it's pretty straightforward and it does the job. So for a very long time, the convenience has been moving more people to buy online. You have a need, you search for that specific keyword, and then you get the relevant feedback from the search engine pretty much. And what's actually interesting is that by contrast, the way people shop and discover new product today has never felt more exciting and personal and creative. So if we take, for instance, when it's finally time to trade your old car and the model you've been looking at appears on your Facebook feed, or after a long day working from home, and let's say you're craving a pizza and Messenger reminds you to use that Uber Eats coupon before it actually expires. Or lastly, this is a British furniture website, it's called made.com, and let's say you're browsing through your Instagram stories and you're feeling a bit envious about your friend's new home renovation, and then you get served an ad from your favorite furniture brand. So essentially, these are just 3 examples of how this discovery commerce works, when products actually find people, but the options feel really endless, but yet they are very personalized and perfectly designed for you. So today we actually expect things to be tailored for our taste in the format we prefer, and people are in control and expect more relevant and personal experience. So this connected world has given people infinite choice and total control over what they watch, read, react with, or buy. So this actually brings us to what we've observed across our family of apps and also across the entire web ecosystem is what the new customer expectations are. And we essentially seeing 4 major expectations and new behavioral trends. The first one would be discovery, and the way people discover products has changed. Rather than going to a physical store, people and brands are sharing and discovering product all day, every day on social platform. So now it's a brand sharing an item that fulfills a need you have, or a friend messaging you a product that they think you will love. And in fact, 52% of online brand discovery happens in public social feeds. And the second biggest need will be immediacy. So people expectation around convenience have changed. They expect immediacy in many ways. So it's never been easier to buy things. So anything can be purchased anytime with a click of a button, and that can literally arrive at your door within an hour. And because people have come to expect a quick and easy experience, they will actually leave if they don't get it. So the expectation level is continually increasing as users are able to get access to any product they want within a few, maybe not a few minutes, but technically, yes, if we take, for instance, food delivery and so on. But essentially, the average cart abandonment in 2019 in Europe was over 85%, and rising to 90% in the Middle East and Turkey, and over 94% in Africa, which is actually pretty huge. So basically, the way you can think about it is that you can lose 90%, you're technically losing 90% of your audience on average. And this is actually worse if they have a poor user experience on the website, or you're not able to fulfill that immediacy need. And the third need is around personalization. And if you think about it, the mass adoption of services like Netflix and Spotify have created a new expectation for one-to-one personalization. So the Netflix personalization engine is so good that almost 80% of the show and movies viewed on the platform are essentially based on recommendation. And it's not just Netflix lovers that appreciate the personalization touch. So basically 91% of consumers say that they're more likely to shop with brands that provide offers and recommendations that are relevant to them. So yeah, basically you have the discovery behavior that has evolved, the immediacy, the personalization needs that continue to increase. But at the same time, so essentially it's around when people shop online, they want to know that their payment information are kept safe, as well as their personal information. So globally, 65% of online shoppers express extreme concern about data privacy. And 1 in 2 people say that they would actually pay more for product with assurance of quality and safety. So we're moving to a space where we actually have it can sound a bit contradictory because people want immediacy, they want immediacy, they want privacy, but at the same time, they want to have, at the same time, they want to make sure that their data are actually protected. And another interesting insight during this COVID time is that e-com has not just been a convenience, but it's became a lifeline for people. And it's been said that 10 years of digital transformation happened in just a few months. And as you can see on the screen, these are insights from the latest research run by the National Statistic report in the UK. And it took 10 years to increase internet sales by 13%, from 7 to 20 in total. So it essentially took a whole 10 years to get there. And just in a few months, the same growth was actually achieved just in 5 months during COVID. So the change itself was not expected, but the pace of change is very drastic and no one could have anticipated. But essentially, as you can expect, there's no point of return. So it's not like this behavior is actually here to stay. So people will not go back to their older behavior when it comes to online versus offline shopping. So with increasing e-com savviness comes increasing consumer expectations, as mentioned before, around transparency and control. So essentially, businesses that are eager to embrace opportunities, e-commerce opportunity, will also need to make sure that they're willing to be transparent on how they use their consumers' information. So essentially, it's being able to provide that high expectation from users from a transparency point of view and personalization. So users will not just put up with that great experience if they don't feel like their data are actually safe and protected. So marketing based on a meaningful exchange of data between people and businesses will be the next big shift in marketing. And that will actually lead to a deeper relationship rooted in trust and respect. So businesses who are winning in today's market recognized a long time ago that to drive desire and fresh demand means shifting to digital and embracing disruption. So this is actually Yves Rocher. It's a global cosmetic brand, and they've worked over 18 months to shift from offline brick and mortar to online. And this was no small feat and has involved fundamental shift in how the business operated. So since April, they've seen a growth of over 10 times in some markets for online across global website. So the main takeaway here is that they were absolutely ready prior to COVID, and they were actually able to yield that growth when that unexpected shift happened. And so even before people stopped feeling comfortable spending time in store, people were turning to online platform to browse and find inspiration. So essentially, this trend has just been accelerated by the recent lockdown. But businesses embracing discovery commerce recognize that the consumer journey starts even way before intent. So these businesses obsess over the consumer journey and its many paths to purchase. And they understand that while meeting demand is still critical, it's now vital to create demand through discovery. And as I explained earlier, discovery is essentially about product finding people and not the other way around. So they have been investing in more modern kind of marketing, something that we call at Facebook. So you will hear it more and more throughout the upcoming month and years as well, something called discovery commerce. And discovery commerce is essentially fueled by machine learning and the adoption of a very broad audience strategy. Combining this allows our platform to find new audiences previously considered out of market for many businesses. So we see this all the time with businesses born and raised online, just like Skin Labo and Never Fully Dressed. Both have adopted smart ways to reach new consumers to serve them with dynamic creative at all at the right time, resulting in business growth and campaign success. And more we're hearing about traditional businesses also leaning into digital, just like Carrefour. Just during the pandemic, Carrefour quickly pivoted from physical to a digital catalog across our family of apps. And this actually allowed them to stay close to their consumers and drive growth for their business at this very crucial time. So essentially, our discovery commerce minded business share these three practices in common. They are all very data driven, and the data driven approach is very rooted in their DNA, so to speak. And they have this very quantitative view of customers, what customers like, their motivation, their preferences, what their behavior look like, and they tend to create these customer centric experiences that meet customers where they are. And what's one thing that sometimes also overlooked is the team structure. So they also organize their team skill set and culture structure around this agility. So that actually including having, so structuring the team in a way that they'll be able to communicate efficiently and to empower those teams to use data to make decisions that will best serve consumer. So in a nutshell, basically, it's just to make sure that the full marketing team is very data driven, whether it's from analytics to creative, and actually leverage data to inform the decision, even if it's just for creating stories that will go on Instagram as well. So essentially, it's making sure that everyone on the team is very data driven. But we all know that these practices alone cannot drive business result. So you need to apply those practices to the right tool to help you get there. So that's where we can come into play when it comes to growing your commerce ecosystem within the Facebook family of apps. So to support your business in becoming even more data-driven, customer-centric, and agile, today we're just going to share what this discovery commerce ecosystem. So basically, what's in the backbone of, what's in the back end of this discovery ecosystem. So it's essentially a system that's designed to help our advertiser grow their business now in the future, and it begins with rich data. So it's about understanding how people are interacting with your business, sophisticated advertising tool, so that will then put that data to work and help your product find the right people. And obviously, we also have a new suite of engaging shopping experiences. And later on in the afternoon, my colleague Priya will take you through what these new shopping experiences actually look like across the family of apps. And like everything we're trying to do here at Facebook, this discovery commerce ecosystem is essentially rooted into privacy and security. So security becomes at the heart of all this new experience. So it's about protecting people's privacy and respectfully use data to drive this personalized marketing. And as you know, which says personalization equals leveraging data. So it's very crucial to make sure that the security comes first, and while still being able to drive business result, given that performance marketing is essentially relying on users' information. So just to recap and simply explain this discovery commerce notion. So it's pretty much enabling businesses to go one step further than they can with any other marketing channel. It's now about meeting consumers' needs, but not just meeting consumer needs, but also how do we anticipate them in a relevant manner. So if we say that e-commerce is about search or making a query because we have a need, discovery commerce is essentially product find people so they can discover the things that they are most likely to love. So it's almost like rather than just showing a product that may not be relevant to people and just to kind of mimic the existing display advertising behavior, it's almost like a combination of what we know for a fact that people are most likely to engage with and to love and to purchase essentially, and making sure that they are exposed to this product. So basically, in a nutshell, today it's critical in this critical time, Facebook has been accelerating the work to enable every business to sell online. And now we're doubling down on commerce through, we actually weaving shopping into the fabric of each of our apps. So from the Facebook newsfeed app, Messenger, Instagram, as well as WhatsApp. So this is essentially, as I mentioned earlier, to help people gather, to help. So basically, this is essentially to make sure that people can discover and buy the product they love within any of our family of apps, whether they're more likely to engage within Instagram or WhatsApp. So it's pretty much driving that seamless shopping experience across our family app. So the vision is to create one unified shopping experience across all these apps. So for shoppers, each shopping experience will be slightly different, and we will use what's best about the app they are using. So as I mentioned earlier, for instance, Facebook app shoppers will be able to see reactions and shares from their friend and community to also understand and just to see what their friend like as well. And on Instagram, for instance, shoppers will be able to express themselves by getting the latest release from their favorite brand, or even exclusive first drops from the brand that we know they have an interest in. So the product is still at a very early stage, but as we're building more features, each app will add unique value. So it's worth considering how to build your brand and start selling your product across them. But as I mentioned, this discovery commerce journey is still at very early stage. And so I'm just going to start unpacking just a little bit, because in the afternoon, as I mentioned earlier, my colleague will take you through what these new features look like. So essentially how we got there is that we've always built for people first, and we know that no people's interests and passions are the same. So essentially, if you take one of your friends' phone and you go through the feed, your experience will be completely different. And that would apply to every single Facebook users. And over the past 14 years, we've been building the newsfeed. So now it kind of became the most advanced discovery engine with a global community of over 3 billion users. So this actually means incredible customer centricity. Every single feed for every single unique user is kind of how we can summarize the experience on the feed, and it becomes discovery at massive scale. So how does the system work in practice? How are we actually able to create this unique experience as making sure that they are good for people and also for business? When we say good for people, is that we also want to make sure that the experience on our platform is relevant for people and also good for their day-to-day use. So not necessarily interrupting their experience with, business relevant communication. So it's essentially how does these two marry in a seamless way without users feeling like their day-to-day usage of our platform is being disrupted by businesses coming in those platforms. So again, people are far more complex, and the story is far more interesting than any set of demographic will ever tell you. So we look beyond the numbers to uncover what makes people interest, and also just keeping the human side of people interaction at heart. So one of the things that we know about people on our app is that they come to our app to share the things they love, the things that inspire them and makes them laugh, whether it's to meet fellow dog lover or express their opinion or just to share their holidays pic. And they each come for their own reasons. And so these reasons will be shaped by their interests, their personalities, their needs, and what they actually want. So knowing what our users care about allow us to then show this content they want to see and to create experiences they will love. And importantly, people can choose the information about themselves that they're willing to share with Facebook, and they can also control that information so which information will be used for ads through ads preference control. But no matter how we tell you, no matter how we tell about people, what they like on our platform and so on, nobody actually knows your customer better than you. So when you share information, about your customer, so what we do, besides what we know about our own family of apps users, we can then combine this with what we know about them, the interest on our platform, and find more people like them, and more people of the people who, so basically it's how do we find more people that are twins to your current users, and help find the similar people who are also more likely to want to hear from you. And by bringing this together, our insights about people with the information you share about your customer. So what our system does is that it helps you create what we call custom audiences. So it's essentially a collection of the people most likely to engage and buy your product. So when a business share information about their customer with Facebook, we also secure data handling. We use our secure data handling standards to match it with people on Facebook. So for instance, if so when a business shares their CRM email data to create a custom audience, for instance, on Facebook, this information is hashed before it's sent to Facebook. And what we do then is that we compare it to our own hashed information in order to match it with the people on our family of apps. So then with the help of our machine learning system, this is how we end up show you which of your creatives, for instance, are likely to be the most relevant to the people in those audiences. And now just to kind of illustrate it, so let's say you're selling shoes, and you might create a variety of ads, and each featuring different talking points. So that would be each unique selling point. So it could be stylish, eco-friendliness, and comfort, and so on. So we know which customer are likely to choose comfort over style, for instance. So it really goes down to the unique selling points, even across a product category, And so the system will show them if someone is more likely to engage with a comfort-related message. So that's what the system will be likely to show them rather than the other messages. And then when people connect with your ad, they can easily move from discovery to purchase. They're already engaging with your product in a place where they love spending time. So there's minimal friction. And with shops for Instagram and Facebook, for example, people can explore your collection and product and then click through your website to buy the things they love. So essentially, it's having this curated experience within Instagram. So again, the idea is to make it as seamless as possible. So when you organize your product into what we call collection, so essentially this is what a collection looks like. So it's personalized and it's grouping many products under this hero image. So it could be themed around seasonal events, promotion, upcoming launches, or trends that you've noticed from your followers. So you'll be able to help your customer find the product that are like for them just with this high level image. So it's kind of mimicking the experience on your own e-commerce website. So the way brands stand from the crowd and express the brand voice visually. And so basically this is not just about shopping, it's also about expressing your brand voice through visual merchandising. Cool. So what we learned from the action of these people can help you also reach even more customers, essentially. And as more and more insight are gathered, the system become smarter, better at creating demand and helping you grow your business. And this continuously improving system that makes Facebook. So basically, that's the continuously improving system that actually helps make Facebook the home of discovery commerce. So just to kind of, we're coming to the end of our discovery commerce session, but like many things, what you pretty much get out of our system is also heavily dependent of what you put in. So for state-of-art marketing that anticipates your customers' needs and show them the product they're most likely to, satisfy their needs, it's very important to start with the right input. And just to summarize, the right input will look from creative and customer needs. So creative, that will pretty much be around really understanding your customers' motivation and use the findings to build diverse sets of ads creative across the customer journey, and also being very data driven and understanding the customer need. So that's pretty much means exploring this wide range of rich data and signals. So this is actually what's going to lead to a more sophisticated understanding of your consumers and being able to build this life cycle and data driven journey. And also from a measurement perspective, just making sure that your measurement align with your true business goal and ruthlessly track the return on investment and use this data to shift in real time. So pretty much adjusting your strategy real time. And last but not least, we can understand that for some of our advertisers, this is actually a lot of, not necessarily a lot of work, but it might actually require expertise that they don't necessarily have in-house yet. So that's why we have our Facebook marketing partners ecosystem. So that's our badge partners that are supporting our advertisers from creative media buying or technical setup. So feel free to reach out to your Facebook point of contact if you would like to explore these Facebook marketing partners. So just to wrap this up, I'll pretty much like to close with one of the quotes shared by our EMEA VP, Nicola Mandelson. So one of the main takeaway from this session could be that business actually realized that in today's technology, they don't need to waste time waiting for people to find your product. So it's about now letting product find your customers for you. And that's actually where we're moving towards. And that's why we call it discovery commerce. So again, thank you so much for tuning in. And I hope this gave you a better understanding as to what the commerce ecosystem start to look like on Facebook and what's coming in the future to start meeting all these consumers' expectation. Thank you so much.
We would like to thank you very much for Michelle and Goyep for this very interesting session. Many thanks to all the speakers in the morning session talking about business unusual. Now we are moving to a break and resume in the afternoon at 1 p.m. Turkey time and 2 p.m. UAE time with the new topic, which is growth marketing sessions. Please join us to the new and interesting sessions from experts around the globe. As a reminder, you may find the detailed agenda at our YouTube channel notes section, as our broadcasting will continue on YouTube. Welcome again. In the morning sessions, we discussed about business unusual solutions which had entered in our world in 2020 challenging times. Now in the afternoon sessions, in the face of ever-changing and challenging economies all around the globe, I, Erdem Tolon, and Handem Çelenkler, Vice Chairs of MMA Turkey, will be hosting you in this most inspiring topic. As a reminder, you may find a detailed agenda at our YouTube channel and in the registration email, as our broadcasting will continue on YouTube. So our next session is about refining the growth model game. A fireside chat with Greg Stuart, MMAGlobal CEO, and Melis Ertem, MMA Turkey and MENA Regional Director, who will discuss and give clarity on initiative held by MMA as a great marketing debate. It's about growth marketing frameworks coming from different disciplines and different industries. The screen is yours. As we return from lunch, we want to start second half of the day with energizing breathing session from Meditopia. Then we will continue with our sessions.
Greg, thank you very much for being with us today.
Of course, of course. You know I'd show up for my favorite chair of MMA chair of all time, right? You bet. Anytime. I just wish I could be there in person. It's funny, I'm sorry, now I'm taking over your whole thing. I actually saw a movie or show that had Istanbul in it the other day, and I was like, oh my God, I haven't been there in forever. I got to get back. So soon, soon enough.
Yeah, hopefully. Really, I mean, we really would enjoy having you back here.
Great.
So today's topic is around the great debates that MMA is conducting. Yep. So could you explain a bit about what the debates are about? And if you could just let us know, let the marketers, because the audience is quite intrigued with what's going on. So we want to know more. We want to understand more.
Great. Okay, so I'll tell you what. So let me just tell you kind of what they are first so people understand. So we have gone out and identified all the great marketing growth frameworks, of which there are 6 or 7 of them. And we brought them now into individual full 1-hour webinars, virtual sessions. Thank you. Couldn't say the word sessions. And we've run those. And then when we finish this, we're going to have Ernst & Young, or EY, consultancy, is going to recap these marketing growth frameworks. And then we're going to have a series of sessions following. I think there's one with general marketers who are experts with them. Then there's one with analytics people. Then a bunch of the participants who have a growth framework are going to debate themselves. And then CMOs are going to debate. So there's 4 sessions here into 2021 that will try to look further to understand sort of what these are. But that's the structure of what they are. And I can tell you more about why we did it or why we thought this was important. But that's in essence what we're doing.
Okay, great. So could you tell us a bit more about the framework so far we've studied, and if you have any favorites, how do they work? And what really makes them the right framework for any given company, any given business?
Okay. Well, let me give you a little background where they came from. That will sort of start to tee off some of that. So here's really what happened, Melise. It became very clear through a series of experts that the MMA works with, that there seemed to be a lack of resolution around what really produced growth. So, sorry, and bear with me, there's going to be a bit of a long answer. So you know that the MMA is doing this brand as performance research series.
Yes.
And it's basically trying to understand what is the relationship between brand and performance marketing. And what's interesting about that, if you talk to CMOs, and this is where it came from, I have CMOs on the board, they say, performance marketing is like sucking the air out of the room, like they're taking all the money, the performance marketers are ruining everything and they're sacrificing the future of the business, okay? When you ask the performance marketing, either CMOs or just performance marketing teams, they say those brand people are full of rainbows and unicorns. They have no idea what they're doing and no accountability. So there's this tension that existed. So we've now raised almost $2 million US to go do a series of studies. In fact, we should have started that research series in 2020, but for reasons that should be really obvious, we're not starting it yet. We just put it on hold until the dust clears in the pandemic situation here. Okay, but we think we're getting close. And we've got 3 marketers signed up, and those will be big, super expensive, really complicated. Well, what's interesting, what got my attention on this is that when we first sort of heard the thesis, and I heard this from the board members, I was like, wait. Marketing's 150 years old, at least at this point. And we don't have clarification on how to invest in brand. I mean, it's the whole thesis of advertising is that brand matters. And we've never proven that or related it back to performance. Now, granted, digital's only 20, but still digital's 25 plus years old at least, right?
Yeah.
Oh my God, 25. Yeah, 25. Yeah, we'll say 25, 26. So I thought, this is insane. Something's really wrong. And by the way, we had to create a whole methodology for brand and performance because it never existed before. Like nobody had done that. There was no off-the-shelf methodology you could buy or product you could buy today to do this assessment we're doing. Okay. So as I started to dig into that, I thought, wow, well, what else don't we know? And it's when we started to look at these frameworks. So there's a guy named Les Binet out of, where's he based out of London. And he's done a thing called the long and short of it, which tries to look at this brand's performance. He didn't build a great data set for it. So his analysis, although probably directionally helpful, is not as detailed as the MMA tries to go to and really resolving things, but it's not bad. Then you go, and there's this guy named Byron Sharp who wrote a book. He's out of Australia, and he wrote a book called How Brands Grow. And listen, I have a lot of board members who really fervently believe in Byron Sharp and what he's doing. But we started to look as to what he's doing. It became very clear it was at minimum suboptimal, if not factually incorrect. So that's gonna, if any of your audience or any of you in the audience here or where you're gonna take great umbrage or be very mad at me for what I just said, but we don't think he's right. And in fact, we have now actually proven that he's not right. But that's what got us going. So the actual framework is we've invited a guy named Pete Fader who's a professor at Wharton. He's very famous. He was the first session. He does a thing called customer centricity. Basically, you want me to walk through each one of the frameworks?
Yeah, please.
Okay, good.
Yeah,
Sorry,
yeah.
I realize I'm going on and on here, so you cut me off and redirect me if you want. You and I are good enough friends. You can just cut me off.
Okay, don't worry.
And if you get me started, especially on this topic, I'll just go nuts on it. Okay, so
yeah.
So here's what happens. So Pete Fader does customer centricity. Pete Fader says you must focus on going after lifetime value of a customer.
Mm-hmm.
Now, a lot of marketers will say, well, I don't know the lifetime value of my customers. And he said, and Pete's a very polite, nice guy. He wouldn't say it this way. He'll say, though, I don't give a damn, do it anyway. And foundationally, Pete's correct. We must understand fundamentally the lifetime value of a customer. It's the whole reason for brand is performance, right? And I could explain the methodology you want later, like the brand performance, but basically brand has to be performance long-term in sales. And so when he talks about lifetime value of the customer, then you have to understand both your brand into future sales efforts and then your performance into short-term sales. You have to understand that relationship, and that's what he's advocating. Mike Hansen, a professor from UCLA, who started a company called Newstar. Actually, it was originally called Market Share Partners, now called Newstar. And they're one of the best of the multi-touch attribution companies out there in the world. Phenomenally smart guys, great. We work with them a lot. They sit on the global board, in fact. Ted Prince does there. But Mike Hansen's point of view is that he's gone through all the research out there and figured out what drives growth. And his thesis is that part of it is that he basically ranked what elements of each one of parts of a marketing effort have the most value. So I'll shorten this. He says distribution is everything. If the single greatest contributor to growth, as proven by mathematics, so he's done all the analysis, is you got to push distribution. If you don't have distribution, kind of don't worry about anything else. Get distribution right. That's the basic thesis. And then he identifies some of the relationships that we know and understand to some degree. Okay. So next up on this session was Byron Sharp, who talked about how brands grow. I wrote a LinkedIn post on that right after he spoke, and we said, well, interesting. We know a lot of people believe, but Byron didn't get detailed enough. And Byron tends to take a stance of like, if you're smart like me, you'll understand why this is the case. And the basic thesis that he says, and that was maybe I didn't need to make that sound quite so mean, but basically what Byron says is you want to do reach, you want to focus on reach, and targeting is stupid is his basic thesis. And if you do reach, then you're basically bringing in new customers all the time. And there's a couple of dynamics of that. One is that you're assuming that all customers or consumers are potential buyers, and they're all have the same responsiveness to the advertising. And that's what's but nobody's ever looked at the responsiveness of advertising until what I'm going to tell you here in a little bit. And so that was Byron's thing, and he wasn't really happy with my post, but I'm like, Byron, your stuff is not backed up, and it doesn't seem to be validated, and we don't see academic research that supports it as we would expect for a professor to have done. So, but listen, a lot of my board members really believe. The next one up was MMA, Joel Rubinson, who does a lot of work for us. But Joel's a former chief research officer of the ARF. So Joel had written a paper in 2017 called "The Persuadables," and that paper basically said it basically said a lot of people say don't target your heaviest buyers because they're already brand loyal. But if you look at the data, and I've now had a couple of CMO board members go look at their own data, and they come back and said this is true, which is that the heaviest category buyers, those who buy the most soap or the most paper towels or the most sodas, whatever, they are also the biggest switchers. And so basically you want to focus on going after those people who have high volume, but also switch a lot, and you can gain a lot of sales there. And so the theory now that we have put forward in a thing called outcomes-based marketing 2.0, because there is an outcomes-based marketing dynamic, it's not well defined, but there's an outcomes-based marketing. And in that says that you want to target not those who will buy your product anyway, and there's a whole group of people who would likely never buy your product. And I'll try to give an example that you can help me translate to there. You want to buy what we call the movable middles.
Yeah.
And those movable middles have a significant responsiveness to advertising, such that if you target advertising at this movable middle group, then you will actually see a return on ad spend 5 times any of your other investments. So there's no brand, there's no campaign in the world that would make sense to target everybody, reach, as How Brands Grow, Byron Sharp, and Les Binet has a similar concept to him, long and short of it, versus going after these movable middles that are really responsive. And so that's it. And then we had another presentation, but those are kind of the core main frameworks. Then we have a new one coming up. I don't know when is the next session, Millie? Do you even know? It's December.
1st of December.
Thank you, December 1st. Yeah. So that's the last of the frameworks. Yeah. Okay. So there. Long answer, but there you go.
Okay. So, but do they, in terms of outcome, differ from one industry to another, one company to another? The results, have they been tested through all industries, all products? Does services like digital products are different than the tangible ones, and so on?
Yeah. Okay. So, I think, Mike, I think Pete's would have the most extensibility, especially to durable goods, automotive, financial services, things where you have registration databases, much easier to do. Hard to do for CPG because they don't know who their customers are.
Yeah.
Or you call them fast-moving consumer goods. I think I'm sorry, it's a lingo there. We use CPG here, but okay. Hansen's is also very retail-oriented because he talks about distribution. So that's usually retail. So a lot of fast-moving consumer product goods. Yeah. And then Byron's tends to be a very also fast-moving consumer goods because those tend to be big brands. They tend to be products bought by everybody. I mean, obviously, if you're selling, a Jaguar or a Land Rover or something, that's a pretty niche audience, and so they're probably targeted anyway, at some level. It really wouldn't make sense. The outcomes-based marketing 2.0 that we've just developed, we call it OBM2, by the way, just for short. OBM2 has been proven now with. We've looked at a bunch of consumer packaged goods. We've proven it with one frozen pizza brand mathematically that it's right. And so we're now about to go do the other categories. We don't know for a fact that it will be extensible or something you could leverage against sort of more considered purchase cars and stuff like that. But we're actually my chairperson now is Deb Wall, the CMO of General Motors. So we're going to work with her and her crew to kind of see if the announcement is there. But understand this outcomes-based marketing, I mean, as a framework, it's like 4 weeks old. Like it got presented once. I presented to the global board yesterday, and the global board said they were very interesting. They stepped forward and said, hey, there's a lot of discussions going on in the industry about how we look at sort of these growth dynamics. We wonder if maybe this shouldn't be the standard that all marketers, could we create a universal framework that the whole industry could adopt to? So we'll see. That's a big ask, but that's what we're going.
So yeah, that was my next question actually. Do you think you can start a pilot with companies, or how do we plan to actually roll this out?
Yep. So what's interesting about, let me tell you one more thing about outcomes-based marketing 2.0, just a little bit. When you're trying to identify these movable middles, there are you have to have a segmentation schema. I hope that word kind of translates. You have to have a database and a segmentation of customers. So we use Newstar's Element 1 to do it. They're a partner of ours. It was easy to work with them. They were really super helpful. And then we use data from a company called Numerator. But you could use, there's in the deck I developed yesterday, Melise, we'll talk about here in a little bit with the MMA team. There are probably there's probably 15 different schema databases you could use in customer segmentations, okay, to identify movable middles. Once you kind of do that, once you kind of really run that whole segmentation, then you can, in a pre-planning phase, know who your best customers are. Now, what Outcomes 1.0 has done is that you pick an outcome. We're going to measure people who go to a website, and then we're going to iterate. But then you're using machine learning and optimization schemas to get there. But it's not a theory. This is a real framework. And here's the interesting part: a media company can do this segmentation for the marketer, and they don't need the marketer's involvement at all. And that is a really big deal, because I think that marketers have felt sometimes even victims to, or media companies have felt victim to marketers, because marketers don't want to share how advertising's performance. They don't want to say it's doing better. So the publisher or the media company or the ad tech company who's doing the allocation, they sometimes know the goal, sometimes they can go to the goals. They just don't have a full range of data. Here they can do that, and that's a pretty big deal. It basically means that the entire world and ecosystem of marketing can work to produce better effect by advertising, which is an amazing thing if we can get there. So that's where we're going.
And direct relation from advertising to sales, like how really it affects.
Well, right. And so good. That's actually good. So I didn't explain. So if you get a 5x increase in return on ad spend, so this group in the middle, they are 5 times more responsive for the money. Okay. They will produce okay. That means your overall campaigns sales due to advertising, which is not all of sales. You know, I don't know what the average stats are. I think advertising's contribution to sales is sometimes somewhere 10 to 30%. I think I don't know. That somebody now will know better.
Yeah, but it's very rough.
It's very it's very rough, and it's very small, and it's usually smaller than you think. You know.
Yeah.
This will increase advertising performance plus 50%. So tell me another thing that you can do that you can get plus 50% increase in your advertising performance. That's revolutionary kind of stuff.
Yeah, it is. It sounds so. I think the audience should be actually following all the recent developments.
Yep. All the presentations are available on MMA's website if they want to go see those, right? And they should watch the debates and sign up. I think we're putting them at time zones that will work for Istanbul and Turkey. I hope so. Mina.
Yeah, it does. I mean, but still we have the archives, so everybody can watch the previous sessions. So one last question. Do you think there would be a self-serve platform out of this just to try for the marketers?
Oh, aren't you asking the big question? There has been some discussion of that. So no promises. I'll tell you what, we certainly would be happy to work with a marketer's interest. So if you've got, marketer members there that you'd like us to talk to about this, we'll do that.
Okay.
But in terms of a self-serve platform, maybe, Melise. I'm a little ways away from that, but maybe. We really just kind of got started, but it's a great idea. I love it.
Yeah.
I love it.
Okay. So thank you very much for joining us today.
Always.
It has been a pleasure talking to you.
Oh my God. Oh, the same as always. It's been too long. I appreciate it. Great to see everyone. Enjoy the day.
Thank you. Thank you very much.
Thank you very much, Greg and Melis, for the inspiring session on growth marketing. As you all know, we are all interested about growth marketing, which is one of the fundamental principles of marketing in today's world. You may find all the debates from MMAGlobal website. Last session took place on December 1st by Jerry Schreiber, founder of InfoScout, about growth marketing, which is how to grow brands, findings from 1 billion shopping trips. So please visit our MMAGlobal website to get further information about growth marketing in detail. Now moving to next session with a very appealing topic, the Vinci Growth, on the characteristics of overperforming growth of organizations. How they differ in the why, what, how, and where of the organization. I would like to welcome on board Mark Deswan-Arons, founder of Institute for Real Growth. It's a non-profit organization that aims to help CMOs and other growth leaders drive more humanized growth. Mark is very active in the area of global marketing leadership. He is the author of the book Global Brand CEO and co-leader of many studies. Mark is joining us from New York. Welcome, Mark.
Good afternoon, everyone. And thank you for that kind introduction. All I can say is I was young and I needed the money. It's good to follow Greg, because Greg was really a very early partner of the Institute for Real Growth. My name is Mark de Swan-Arons, and I'm speaking to you from New York City. And I just looked at the weather forecast, and indeed, we both have drizzly, dreary weather. The winter is really kicking in, but everybody is safe in their homes, I assume. Maybe one of my children will come running in at some point and scream, and I will be like the professor who the BBC interviewed. And perhaps even you will see in the background that my wife tries to pull the children out of the room, much like the Hong Kong interview. If you don't know what I'm talking about, look at the Hong Kong BBC interview. I'm going to talk as part of this growth session about some of the key findings of the Institute for Real Growth, the name says it, and some very specific COVID lessons learned for the market and for us marketeers. It's very special, and I'm very honored to have been invited by the MMA Turkey and MENA, because it's a region in the world that I love. Istanbul is one of my favorite places in the world, and I have some very close friends in the area. And my family and I do a Blue Voyage almost every year. And then, of course, Dubai, one of the most exciting cities in the Middle East. So it's a great honor to be able to talk to you. I hope that you are well, that you are safe, and that you have medicine coming your way, like all of us are waiting for the solution to this horrible virus. So let me talk a little bit about the Institute for Real Growth, because our purpose is to help CMOs and other growth leaders drive what we call more humanized growth by connecting you to your peers in programs that we organize, to experts that we bring, and to thought leadership that we have developed. And we run live action programs that people actually sign up for, both online and in person, synchronous and asynchronous. And we have a broad set of partners. As I said, the MMA was there right from the beginning, but besides them, we have WPP, Google, Facebook, LinkedIn, Spencer Stuart, Salesforce and Kantar, Exeter, the leadership consultancy, and the universities of Oxford and New York. We are not for profit, and we are completely independent. In other words, what I'm sharing with you was not paid for by anyone, and it comes from independent research. Our participants are very senior marketers, and I thought I'd just highlight some of the ones from the region that are in our current growth leadership program. And I'm sure, given how close-knit your senior marketing world is, that you will know some of the faces on the page here. So let me take a step back, because why did we do this? What we saw was that traditional businesses were not able to rely any longer on the traditional growth formulas that had been delivering continuous growth really since the Second World War. And at the same time, there seemed to be an identity crisis, an influence crisis around the role of the CMO. We've seen an explosion of titles. Fundamentally, one that we keep seeing pop up instead of a CMO is the Chief Growth Officer. And of course, you have to ask yourself, if there is a separate Chief Growth Officer, then what is the role of marketing? Now, I'm sharing some updated research with you, and the data points are since COVID struck, which makes it even more relevant. And I'm going to focus on what differentiates growth over performers versus underperformers. Now, there was a model that you may have heard us talk about before. I want to quickly review it before I get to the implications. We call them the 7 building blocks of real growth. And the first is really the way that you look at your market. The overperforming companies do that in an abundant way. They don't think about Nielsen market share, like a 27% share for hair care. They actually think more in terms of what is the Amazon market share, or even if we expand the market to include all competitors that come from places like Kickstarter. The example here is a large multinational that was in negotiation with Amazon about its e-commerce activities in hair care. And they said, we have a 27% market share. But Amazon said, actually, no, we don't see that. We see you having an 11% market share. And what turned out to be the case is that Amazon takes the definition of the hair care market much more literally than the manufacturer. The manufacturer really meant shampoo and conditioners and perhaps gels, but basically products in plastic bottles that you can put on the supermarket shelf. And what Amazon was adding to the category definition were things like hair dryers, hair blowers, hair curlers. And then, of course, the market expands dramatically, but it is hair care. And to the credit of the company, they then went back to the fore and said, okay, if we're going to define our market like that, through products and services that help you take care of your hair, then actually we should include YouTube channels like My Hair Today, or products that are being developed in Kickstarter.com right now to help you take care of your hair. And if you expand the market that broadly, suddenly their market share wasn't 30, but it was 3%. That also then opens the road to many new innovation concepts, new partnerships, also new competitors to learn from and to collaborate with. The second way that overperformers work differently is that they are willing to work with multiple business models. In other words, they play chess and checkers at the same time. The willingness to accept new business models is 71% over among the overperforming companies and only 39% among underperformers. So it's a massive difference. Now, what do I really mean with that? For example, Coke buying a chain of coffee stores or Pepsi buying SodaStream. And then there's evolving experiences. How do we actually create value for you? Now, what we see is that overperformers embrace what I would call the always beautifully dissatisfied customer. This is Jeff Bezos's term, and it's one that we think is very good because look at yourself. The moment you get used to something in one category, you start demanding it in other categories. And this is all about focusing on eliminating frictions. Again, Amazon, whose biggest problem is that they can't deliver a package because you aren't home. And now they even sell locks with cameras so that you can install those and they have the unlock key, but you see that all they did was put a package in your door and then they closed it again. Again, the data here is the contrast between overperformers and underperformers. Now, those were three things about what these companies do. Now I'd like to talk about how they work. One is they have a different culture. They have an open culture. It's much more diverse in its strategic decision-making. I don't mean the person that hands you your hamburger or kebab. I mean the person that's actually taking the strategic board decisions around where are we going to grow. And what we see is that there is much more diversity at the senior level among the overperforming companies. And they are also much more anticipative in how they work. They literally connect better, both vertically and horizontally, 5.5 times more compared to underperforming companies between senior and junior, and 3.5 times more between marketing and other functions. And this comes out of research that LinkedIn did as part of their collaboration with us. And they are much more integrated between marketing and sales, which, if you think about it, social commerce, for example, what is that? Is that marketing or is that sales? It doesn't really matter. The customer doesn't care. So the fact that we need to be more integrated there is echoed here in these numbers. And then something about the teams. They are truly what I would call whole-brained. In fact, they combine technology and human creativity. They understand that that's what it takes to unleash the potential. But they do start with the data. Really, the data and analytics, as you can see, is at the core of decision making. And those are three parts that are different about how the company works. But most important about the why of the company is that they think more in terms of humanized growth. Everybody is interested in the top line, but when you look at the bottom line, then you see that underperformers really focus more on that. And overperformers actually focus more on the impact on people. So these are the 7 building blocks for real growth. 3 whats, 3 hows, and a why called humanized growth. And we really see that as the emerging future. We interviewed over 650 CMOs worldwide, and we see that this concept of thinking through the human in every aspect of our business is really what differentiates the overperformers from the underperformers. Now, when you think about who then needs to be in your mind when you're talking about humanizing, we think it is about all stakeholders. It's not just shareholders, it's actually the colleagues, the customers, the community, and the capital markets. Now, fast forward or fast back to the beginning of this year, when suddenly we were all facing a new reality with a very unknown future. I mean, this is still very much the case. At the same time, in different places in the world, the systems in place are truly being questioned by consumers and the general population at large. Why do we work this way? Why do the companies, why do these biggest brands exist? Why do these big companies get all the money? Why do senior people earn this much money? A lot of inequality, a lot of questions around equal rights, especially in North America, but also in Europe. And what we saw was a real shift, because pre-COVID, it was the customer and the capital market that was truly represented in the boardroom. But immediately when COVID struck, not post, but when it struck, the discussion in every boardroom was around, how are our colleagues? Are they safe? Can they do their work? Are we doing what we need to be doing in the community? And we had a complete pivot from a focus on two target groups to two other target groups. Now, what of course we've got to do, and this is what I was talking to you about, this is the Hong Kong based professor who was trying to keep up a professional facade while his daughter came in and literally bulldozed her way through his speech with the BBC, is that we're leaving this sort of work-life split to a much more humanized approach, where when we're on the phone, you probably have kids running around you at this moment, or maybe there's a cat that walks over your keyboard. They like to do that. My cat certainly likes to do that. It's become much more human. We know so much more about our colleagues as people, as humans. And many companies have stepped up in the community to do what they felt was necessary to actually make a positive difference. And some brands have even gone further and really gotten into the politics of why are things the way they are. And sometimes unifying. This is Adidas and Nike both pushing for justice and racial equality. So as companies, as leaders, what we need to do coming out of this is that we've got to apply humanized growth to all these stakeholders. And this is where it gets interesting, because this gets into a mega trend that was already ongoing. And you'll know that what COVID has done is it may have started some new trends, but it certainly sped up a lot of existing trends. It was 2008 when Bill Gates first said to the Davos World Economic Forum, we can't keep working like this in capitalism because it will struggle and fall down, because it isn't delivering results for everyone. And over time, this snowball of protest against the hardest form of capitalism has only become bigger, with, in 2018, the CEO of BlackRock, the world's largest institutional investor, actually saying to CEOs of companies everywhere, if you want me to invest in your company, don't just tell me about your financial performance. You also need to, and I'm going to quote, show how it makes a positive contribution to society. This was already going on, and it actually, if you like, came to a summit in 2019. This is only a few months before the outbreak of COVID, when the US Business Roundtable, the 200 biggest CEOs of the world, said, we're going to swap and actually focus our purpose as a company, as a corporation, to all stakeholders. I really encourage you to read this. So, what are the implications for marketers? Why am I telling you all this? Well, because now two worlds collide. Marketers have been in trouble. I showed you that slide where the title is being exploited. Marketers felt that they were losing influence, losing business credibility. And many have documented what you might call the CMO crisis, with articles in Harvard Business Review, with Spencer Stuart highlighting that the CMO is the first to go when the business has a downturn. And it's true that when we talk to the peers of marketers, when we talk to the CEOs and the CFOs about the CMO role, what we hear back loud and clear is that, one, our colleagues feel that we have been over-focused on the communication part of the job, the how to win, rather than the where to play, which is the business part that they feel responsible for. And of course, it doesn't help when those other peers of ours see marketing coming up with digital toys like an Alexa toilet. I mean, Alexa enabled toilet. Who needs that? It makes our business colleagues think that we don't understand that we're in the real game of business. And we are not deemed to be sufficiently commercial. Our peers think that we're just not proficient. So the two worlds collide, because here are these CEOs that now more than ever need help in taking a humanized growth, a multi-stakeholder growth perspective. And here are marketeers looking to add more value within the organization. And we think the two are a massive opportunity, because who better to advise the CEO than the CMO that is gifted at interpreting underlying needs for all of the stakeholders, that is especially good at innovating value propositions for all of the stakeholders. We don't need to lead it, like colleagues is led by the CHRO, of course, but we can partner with human resources to actually develop employee experiences that are consistent with the company purpose. And you have to ask yourself, if you step back now and you look at what companies are trying to do, what overperforming companies are doing, and you look at what the world needs, then the question becomes, in my mind, if not now, when is the chance for you to step up? And if it's not me, then who is going to step up? We think the time has come for marketers to step up and partner with the business to lead more humanized growth. And that is all about an increase in empathy in business in general. We had over 100 CMOs in our program last year, and this came out as number one as the emotional climate in the company changed. If you now want to have a conversation with a CFO about how people are feeling, it has changed dramatically versus just a year ago, when you probably couldn't have the conversation. EQ over IQ. And at the same time, we're seeing that it's make or break for brands. When Dove quickly kicked out of the starting blocks and ran its campaign celebrating the first responders, they did so because they were very clear about their purpose. Lots of other companies basically got all twisted and delayed and confused and insecure about what they could say and what they could do because they weren't clear about their purpose. Now is the time. And that steps up the role, if you like, for the CMO of the future, what we call the Vinci Growth CMO. Somebody that has experiences that are relevant for the job at hand, but also brings real growth CMO attitudes that are about not necessarily leading everything, but being a servant leader in helping colleagues understand what it takes to win. And that means that now is our time. And we did a quick survey among our participants in the program and asked, in 2020, has your strategy, your organization strategy, your company business strategy become more humanized? And the answer is yes, for 78% of the people. And we asked separately, has your influence, these are the biggest CMOs in the world that you see here together in Cannes, has your influence increased? And again, 65% of the CMOs said, yes, it has. This is our chance. This is our opportunity. And with that, I'd like to say thank you and hand you over to a very close friend and colleague, Emre Sayin. Istanbul, Dubai, thank you for your time, and I look forward to meeting in person at a future date. Signing off from New York, it's Mark de Swan-Isles. Reach out to me if you have questions, ideas, or suggestions, or if you're interested in our program. Bye-bye.
Thank you, Mark. It's always a pleasure to listen to you. And our next session, now it's time to our next session. We will have another dimension for growth, and our esteemed CMOs will be on the stage. So they will be discussing growth marketing, balance of art and science. I would like to welcome Elif Kaypak, Marketing Director, TCCA BU from the Coca-Cola Company. Devrim Melek, Senior VP, Strategy from OSN. And Emre Sayın, CEO from Global Ports Holding. So please welcome.
Thank you, Hanem, for the introduction. Great to see you, Greg and Mark, and good afternoon, everyone. It is true that traditional formulas in marketing do not work anymore. And I also feel that the role of the CMO and the whole marketing organization is being reduced to more functional roles such as promotion and communication. We all see the need to embrace new ways and, and to, in a way, to return to the old role of marketing, which is to help the business grow through better products, experience, the right service, and better ways of acquiring new customers, retaining them, and also creating, if we can, a clan of enthusiastic customers who love our brand. And I think COVID-19 just kind of made this more pronounced, this need to change, to improve, to adopt. And for many businesses, it's really somewhat a different world out there. So to discuss what changed and how some of the biggest brands in the region are adopting and changing, I'm delighted to be joined by Devrim Melek, who is the Senior VP of Strategy at Orbit Showtime Network, or OSN. And my other guest is Elif Kaypak, who is the Marketing Director for TCCA at Coca-Cola Company. And I think that stands for Turkey, Caucasia, and Central Asia. Is that correct, Elif? Okay. So without waiting any longer, I want to start by asking my guests about marketing in the days of Corona. Devrim, let's start with you. Can you tell us about the changes and the difficulties and maybe the opportunities this period has brought to your business?
Well, actually, thank you, Emre, for a very nice introduction. This is extremely interesting period for all of us. For our industry, actually, the period due to people staying mostly at home and their entertainment choice are mostly limited with their TVs and devices. Globally, we see growth acceleration in media entertainment industry, basically helping mostly on OTT platforms or apps. We also have an app, so the growth of our app during that period is enormous. The time spent watching TV, viewing any form of content also increased dramatically, especially in our region. And people always loved movies and the dramas, but during that period, because of long viewing times, they also had the chance to explore other content categories and genres, which they were not really exploring before. And a lot of discoveries happened, which helped us to also lend our message of variety in the offerings of the product. In terms of business results, this period gave us an opportunity to increase our subscriber numbers, also improve our engagement with our subscribers, and discover different behavior of consumers as well during that period. And we've seen a shift from linear viewing to non-linear viewing in both of our platforms because we have home product and also an SVOD product. And the challenge was, of course, working from home as an organization during that period, which we had a couple of launches in that COVID times. We launched our new branding. We launched our new SVOD platform with Disney Plus partnership. We launched our new box with a completely revamped UI UX during that period. NOS and originals, maybe even due to the increased efficiency of being at home and bringing our authenticity into what we are doing. The only challenge we have, all entertainment companies had during that period, is the productions were impacted. So globally, the studios or all producers had slowed down their productions. They were not able to shoot new movies or dramas. This is a challenge, and this still is a challenge for us at the moment, pushing a stress on management of our library. But the positive side of it is it also helped us to build or improve our curation capabilities and storytelling capabilities with what we currently have in the industry and the market.
Very interesting. Very interesting. Thank you. And it seems to me like keeping this level of the business even after your captive audience kind of starts, going outside, is what looks like success in the future for you. So, even this level, maintaining this level after the COVID-19 period would be a great success. So I'm dying to ask you a question about that. But first, let's move on to Elif and find out what.
Thank you, Emre. Totally different industry than Devrim, so it's going to be very different. We produce and we sell tangible goods, drinks, beverages to the world. So I'll go back to those days. When we first asked to go homes, there were a lot of unknowns, and I'm sure everybody did so, but tons of information, strategic consultancy papers were like raining from every angle. And everybody was offering a piece of wisdom. It was an unprecedented thing. So I was asking myself a lot of questions: how to ensure the business continuity in terms of services, how to make sure the consumers get the products they weren't, how do we produce, first of all, in the factory, reach to the stores, and then the consumers go to the store. It was a huge chaos back then. Plus the consumer engagement. We are a company who are like on air digitally or on TV, full year long. So it was very difficult times. And the other challenge was to keep the teams engaged at the moment, because we have big marketing teams, as we are a marketing and consultant company in heart. So keeping those people engaged were big challenges. Then you were also worried about your personal health, mentally and physically, but as a leader, you had to stay strong. A lot of things were going on at the same time. I think what we did fast, we acted really fast. We didn't paralyze ourselves in the whole analytics world. We immediately paused our communication and switch gears to more digital and e-commerce efforts. We streamlined most of our efforts. We focused on the big bets, and we had to let go the nice to have things. We focused on a fewer brands globally, and speed to digitalization, it was excelled tremendously. It was coming, obviously, all of these things, the growth of e-commerce, the acceleration of digitalization, they were there. But during this period, I think the speed of the development was tremendous. We channeled a lot of resources to the right places. I think that's the big thing we did, the biggest thing. And the other thing was we had the constant communication with the teams to keep them feel safe, to keep them feel cared, so that they could continue working on the fewer bets. We tremendously streamlined the jobs to be done to fewer items. So I think that also helped us keep focused on the things that we need to do. And honestly, during the period, we had no issues in route to market or reaching to the consumers. All of the system worked very, very fluidly and flawlessly. So I'm happy that there was no out of stocks, there was no issues in consumer engagement, etc. So overall, I think we we haven't gotten out of the crisis yet, but we are getting some results, and we know more now, so we are more confident in the things that we do.
That's great. Just a little question. I assume your HoReCa channels must have been impacted more by this. How
Correct.
did you deal with that? Like, what was the difficulty? I mean, you don't have to explain how you dealt with it, in detail, but I assume that was a big challenge for you.
It was a big challenge because a big portion of our business go through HoReCa channel, and not only cafes and restaurants, hotels. Imagine all those 5-star hotels in Antalya region and everything. So that was a lot of nothing. We could do nothing, Emre, rather like in terms of sales. What we did was they were closed. There were no guests, so there was nothing to do. But what we did immediately is to support them to go through this crisis period. We got a donation from Global Coca-Cola Foundation, which was split through the regions in the world. We got a good portion of it. And we created support programs for our HoReCa customers, for their employees as well, to go through this crisis together. And this has been very, very helpful. And we created, we have an app. We created like geo-targeting things to support after they were open. We created digital coupons for the consumers to go to their local neighborhood cafes. We also gave them some hygiene kits, trainings, etc. Also, a lot of both financial plus promotional support as well.
Yeah. No, I think that's a very, very good example, because I think this crisis has taught all of us that that all our stakeholders are very important, and this includes employees. So you talked about your team and how concerned you were on the well-being of the employees, but also our trade partners. It's extremely important to basically, as an ecosystem, to get out of this in one piece, I guess. So I want to move on to another question that that really excites me. I'm wondering what you guys are going to say. It's really on growth marketing. We've been talking about digital channels increasing in importance since years now. And it feels like during this period, someone pushed a fast forward button. And I want to know how you guys are adopting your growth strategies. What are your winning formulas? And also, I wonder if this is a time to look at companies who have kind of excelled in using digital channels to grow. I'm talking about small companies, I'm talking about startups, and I'm actually talking about this term that has been framed as growth hacking. Did you use similar tactics? Did you look into what growth hacking is and what these companies do? Is there anything that corporations can learn from them? So in general, what do you do, and what is changing, what is improving, what are you planning to do in terms of growth? This time, let's start with Elif, and then switch back to Devrim, if that's okay.
Thank you, Emre. Yes, what I will start growth hacking. I don't know if we have done it that much. As I told we are a bit of a conventional company, but in terms of digital investments, we used to have, I think, 10-12% of our budget. We went up to 30%. So it's a huge increase in our investment into digital. It's not only communication, like content or media investment in social media or digital platforms, but also partnership with our e-commerce partners. So we immediately, well, I told you, we switched gears and we got together with our e-commerce partners, either like online shops or also last mile delivery startups as well. We created, we are a very good company in terms of merchandising in traditional supermarkets. We learned very quickly how to do an e-shelf on an e-commerce partner. So how to create the promotions according to the needs of those online shoppers. Also, we partnered with their data knowledge and we created offers, products, promos, changed all our promos from free liquid promos, for example. We started to give a lot of gigabytes, internet packs, online video streaming, free online video streaming opportunities to our consumers, and we did it through our partnership with all these online e-commerce partners. I think we also excelled in we knew the importance of data, consumer data. We excelled in usage of it and in terms of precision marketing, performance marketing. We excelled together with their knowledge. Of course, they are very capable in that. One thing we have also hacked, maybe that could be an example of growth hacking. We found out some newcomers in startups. I'm not going to name them because we decided to start together. We, a music platform, which is new, and they were growing really fast. And we decided to partner with them and grow with them during this pandemic. I think it's going to be huge next year once we reveal the details. But for now, yes, in terms of learning, we learned a lot from their data usage and also 1 or 2 content providers we are partnering with.
That's great. That's great. And, don't get hung up on this growth hacking terminology. I think you guys are doing a fascinating job. For example, I think your collaboration with small merchants and restaurants and cafes in terms of menus, for example, I think that's a growth hacking strategy. Anything that really kind of gives you the boost to grow your business, grow your customer base, improve your communication, especially if it's measurable or if you can replicate it. I think that is
yes.
Emre,
I want to say a few words on that. That's called the Support Your Locals program, which we created their digital menus together and then helped them with hygiene kits and everything. It is measurable. We used a lot of geo-targeting. We partnered with Google for that information to direct consumers to their local cafes and restaurants to be able to support them. We won, maybe you've heard a lot of Smarties and Felis Awards with the results of that. We won 13 awards, I think, for that promotion. It's a combination of both support, like a social responsibility program, plus some digitalization efforts. It was really very appreciated. Thank you for mentioning that.
Well, congratulations to you. So I want to move on to Devrim right now, and I expect it's going to be, a slightly different story. Again, you guys are a bit more digitally native, but still, this is the nature of any business. Success does not guarantee that you get to lean back and just enjoy. You're going to be expected to grow further. So what are you doing in terms of growth? What can you share with us some examples of that?
Actually, it's a completely different story because the product, we have 2 forms of product. One is a home product through the box, which is not different than a physical product. And then we have an SWOT platform, which is an app, which is not physical. So it's a fully digital ecosystem itself, which benefits from the accelerated growth in the ecosystem overall. So I'll focus on the app side of the business. I think this is maybe more interesting. Actually, what we see as a shift is we were on the transformation of digital business. We did the launch of the product, whatever we do, it just was on a fast speed mode. Actually, we are on a fast speed mode at the moment. It's not like as planned, it has to go even further than the plan. But now we see definitely that we need more resourceful marketing capabilities, more resourceful marketers, not like a creative or not like purely with marketing and commercial skills, but also we are now building technical skills. We have data scientists in the process. We have product owners or product managers in the whole process of growth hacking, if we call it that way, because it is not like doing a con part of it. It's an ecosystem that it even impacts what you avail in your product the other day. So what we did is we realized during that period that we need to have more and deeper understanding of the digital networks and the digital ecosystem in order to be able to manage the cost of acquisition better, because there is a science and art together in optimization of your efforts to onboard people at a cost that you want, and with a sustainable growth model. Because what growth hacking definitely brings in general is what is different from what we were doing. What we were doing before is we were running after premium or high mid-tier people, even with higher cost of acquisition, and trying to keep them in our systems or with our products longer periods to have the profitability or sustainability. Which means on the funnel, top side of the funnel, maybe it was a little bit narrow compared to what we will talk when it comes to performance marketing. And then the conversions we were focusing on. Now, what we are doing is a little bit different. Now we want to onboard as many as possible people on the funnel and try to manage the other part of the funnel in a different way. So, which means top of the funnel should be so big. So let's bring everyone. Let's bring not of course unconsciously. There is a selection period process, but let's bring more people, and let's try to keep and engage them with the product with the rest of the funnel. So this is not limited with acquisition process, but it's the onboarding process. It's the journey within the app. It's the everyday interaction that they do in our platform that brings growth. So our growth strategy then is not limited with demand generation. It's one part of the story. And for some of the businesses, this is the only side of the story, of course. In our case, we also have the retention part of the journey, which brings the growth in total. So when any customer comes in, what we focus now is how can we test and learn from every step of the journey, so that the next day when another prospect comes, they might see a completely different world. So our growth hacking strategy is not limited to digital activities that we do on the network, but because of the nature of our business, it starts with actually content selection. When we do acquire content or produce content, the selection is based on the possible appetite of customers, either watching the content or creating buzz around the content. Some content you go for talkability, some content you go for consumption, and the one who has the talkability thing and buzz impact brings more demand on your funnel. We had a lot of stories around our content with a very strong social presence tied with the concepts that people are already engaged with. For example, we currently have Mulan on the platform, which is engaged with women empowerment. And it's the stories around that. We also put a lot of focus on the engagement activities we have on the platform. How we can help people to discover more, how we can help people to consume not more, but in a more quality way. Let's think, how can we increase the quality of service? That we focused a lot on it, indirectly also helped growth of the platform. And also, we have one very helpful element in the process, which is helping this funnel a lot. Our product is a download and watch kind of a product, and it comes with a free trial. So you have a chance to try before you buy, which means there's no harm of getting into that, and there's no risk of it. And even if you get into the platform, you can go anytime you want. So it's a paid trial or free trial is there, which gives us actually then the advantage of onboarding more people to the platform. This is more or less what we played with. And one thing we are spending a lot of time and effort and invest a lot is marketing tech tools. We already have invested last year, and we developed a lot of integrations around that. But with this period of COVID, we learned that it's not enough. Now we are deepening our, not only the investments, but also our skills. We are bringing digital native people to the platform, to our teams, to also build this capability of understanding the consumer and understanding the internet world in a better way. Maybe these are the things that I can share.
Yeah, and these are enough.
Yeah.
To tell the truth, you could be talking about an up and coming startup right now, and they would probably say exactly the same things. These free trials to expand the reach, the strategy to appeal to a wider audience, get as many people in and manage your funnel better so that you increase your customer base. Don't be too shy about getting new customers. Try different groups. You have to prove your own to keep them, right? I mean, I think this is all.
Emre,
yeah, please go ahead.
That's a very amazing and critical point, I think, because we all now, even all the legacy businesses and brands, are literally pushed to learn how to be or how to have a startup mind in our business world. This is what we are trying to replicate. We are trying to be like a startup, and it seems it's a extremely exciting journey. And also we see that this digital environment or this startup mind gives an opportunity to have testing every day, test and learn every day and everything. It's just not do one thing and wait for a month or 2 months, but do multiple things, which I call as if we are not living in a Newtonian world, but it's like we're living in a quantum world, where like we have a lot of parallel lives together, executing them together and pick the best one to move forward.
Exactly. I think we all need to start thinking smaller in a way, faster, and a lot of trial and error. That means a lot of measurement, a lot of data processing, and being very focused on the end price. This was very exciting. Thank you very much, Devrim. So we're kind of reaching the end of our discussion. I want to ask you shortly about how this affects your teams and the culture, especially the creative processes in your organization. So maybe, Elif, can you talk about how this impacts the culture in your team and the company?
Emre, thank you. This is the biggest part, I think, that I've seen in the company, as we are, like, I think resilience and resourcefulness were the two big traits that came out during this period. I'll give you an example because I love this example. In the past, we used to, like, we create a lot of campaigns. We have multiple brands, and for those campaigns, we work with big agencies, big media channels, etc. So we do like PPMs, pre-production meetings, pre-alignment meetings. We go to the sets, or sometimes we
Yes, I
spend
remember
days
all of
in
that, Elif.
shootings, etc. And then
You still do though.
and all of a sudden, everything was closed, and we were like, how are we going to shoot these copies? How are we going to create these campaigns? Not only the TV copies, but the whole strategy and everything. You know what we could do? We could shoot a TV copy in Baku online. I mean, in the past, we would travel to that country, 5 people, 3 days before and 3 days after the shooting, doing the editing and everything. And we didn't even know we could do this. We were connected to the cameraman from Turkey, from different computers, and we shot and we edited together. And we were like, oh my God, we didn't know we could do this. So the team really showed how resilient they were, because they didn't give up. I mean, they could have come to me, okay, this is not possible. We need to find a different way. No, we can do it. Plus, they found resources to do that. So it was amazing. One
And
more example.
It seems like by not going there, you actually became more of the process. You were able to become more a part of it and feel it and maybe
Exactly.
control it more even than personally being there.
Yeah.
Because I never got to talk to the cameraman when I was doing the PMs. That's interesting.
One more example that was also very interesting. If you remember, Devrim said production was really hampered during that time because people couldn't get together. So content production was really scarce. So most of the TV shows, the TV series were stopped. Channels were rerunning their programs while the viewership was increasing because people were at home. There was one TV show which didn't stop because it was shot in Dominican Republic Island, and we were the sponsor of it, and we leveraged that partnership huge time. We partnered with their Instagram broadcast. More than 3 million people linked together one night for a Coca-Cola party in the island. So that was also, when that show started, it was a startup in its way, and we were partnering with it, and we grew together, and it shows us that the value of these partnerships, how it pays out in the end. So that was also a very very interesting thing. In I think 3 hours we were connected to the island. We sent the products from Dominican Republic production center. We created the party atmosphere there. It was we did everything online. Nothing. That was pretty amazing for me. So I think the culture, the team now sees they can do things without being there personally. They became more agile, more much more faster in reaction to impossible things. So I'm very happy where we are evolving, honestly.
Thank you very much. And Devrim, how about your team and your culture and the creative processes? Were they affected?
Not really much, because we have our OSN studio, so we do our creatives, our productions ourselves with our own creative agency in OSN with our own people. And because we do content work ourselves, we work with a lot of materials already, either by shooting it or by the materials provided by the content producers. And this, due to that fact, we have a big know-how in the company, how to deal with content, how to use it, how to make it a big story. And that brings agility already to OSN, even at normal times. Actually, this worked even better during COVID times because we use this capability to even introduce more than what we were doing before. This is, for me, like an amazing factory. Our creative people are not only involved in the process when the communication or campaign is being prepared, but they're part of everything since the concept design of an acquisition or a production, how to deal with it, how to use that, even doing some shooting and recordings during the production of any shows that we have. And I think we leveraged that a lot during that period. On the digital side, what we were using apart from videos, again, we use the A/B testing all the time. We did a lot of experiments. We launched many different versions of a single content based on the country, the network that we're using to see the impact and effectiveness, which we learned a lot during the process. One thing, maybe one important thing to add on to our creative process is literally this big data concept, which is when everything goes to digital and you have more information and insight coming compared to normal days, and everything goes through that world, then it brings a lot of new information for the studio to work with and tweak it and make the OSN twist of maybe normalized communications around the industry. That would be maybe something to also mention.
Thank you very much. Well, this has been certainly very interesting and fun discussing with you guys what happened during this period and how you are looking forward. And I hope everyone else enjoyed it as well. I certainly did. Thank you very much for your time and for your ideas, for sharing those with us. Now, I guess back to Handem. Thank you.
Thank you, Emre. Thank you.
Thank you very much.
Thank you. Thank you, Emre. Bye.
So thanks to all the speakers in growth marketing sessions so far. So now we will be having a 5-minute break. And when we will be back, we will be having more growth marketing sessions with experts from the globe. As a reminder, you may find the detailed agenda at our YouTube channel notes section. Welcome again. Our topic is growth marketing this afternoon. So far in the morning, we have discussed marketing growth frameworks, the Vinci Growth and Growth Marketing panel with CMOs. So now we will be continuing with a great panel, which will be a crowded but a very interesting one, I assume, on growth-generating strategies. To compete and lead an ever-challenging environment, marketeers need to be prepared for what the future holds. So I would like to welcome Burak Sezercan, Retail Banking Marketing Division Head from İşbank, Batuhan Gültakan, CEO from Getir&Yemek, Sertaç Daşdelen, founder of Faladdin, Furkan Anarat, Head of Growth from Aunas Altair Group, and Peggy Ann Salz, Forbes editor, lead analyst, and founder of MMAGlobal, will be moderating this session.
Thanks so much, Hamdan. It's great to be here. It's great to be with our panel here today. In the next 40 minutes, we're going to explore the variety of ways expert marketers here on our panel are approaching growth to generate increased sales and impressive results for their business. Also engagement, we'll be talking about all of those today. I'm your host, Peggy Ann Salz, mobile analyst, tech consultant, senior writer at Forbes, and chief content officer on the board of the MMA Germany. And as I said, we have an amazing panel, a wide range of business verticals, ranging from financial services to luxury goods, retail, all of them here to share, in particular, their real life examples, really actionable advice, examples that you will learn from. I'm sure we all will. So I want to just introduce them quickly to give you some context, because it's important to understand they're bringing all sorts of different perspectives. So with that, let me introduce our panel. So Burak heads the retail banking marketing division at İşbank. It's the largest private bank in Turkey, I'm sure you're aware. And he has worked for İşbank since 1996, has extensive expertise in risk management, strategy development, and marketing. So thank you for joining us today, Burak.
Hi, everyone. Thank you very much.
Great to have you. And we'll be hearing about that because, of course, financial services are experiencing tremendous growth. I've written about it, researched it. Another vertical that is seeing soaring consumer interest is order and delivery. And to discuss that, we have Batuhan. He's the CEO of Getir. And that is a company we're going to be hearing a lot about, because it is these times where it's all about bringing things to people, making their lives simple, removing the friction. Getir, I'm sure you all know, means bring in Turkish. Founded as a personal butler service, now a giant in delivery, plans to expand to cities outside Turkey. Batuhan, thank you for joining today, particularly for making it.
Thank you for having me and my company. Thanks, Peggy.
Absolutely. From a different angle, a very future-oriented business, literally, I like that in all sense of the word. We have Sertaç, co-founder of Faladdin, an artificial intelligence fortune-telling app that counts well over 25 million users, going strong. Sertaç is a technology entrepreneur working at Ernst & Young Business Advisory in Dubai and Singapore before he made the decision to move on, dedicate himself to his entrepreneurial and artistic endeavors. Digital nomad, photographer, DJ, model, and going to tell us about the app economy and the impact here. Thanks for joining us today, Sertaç.
Thank you, Peggy. It's an honor to be with you here today. Thanks for the beautiful intro. And I love the effect when you say fortune telling, I see people smiling. So I think that's one of the beautiful things about my business.
And it's also exciting. It's an ad-supported business. It's growing strong, a lot of localization, a lot of growth. We're going to hear about that. And also talking about growth, I mean, growth is always at some level data-driven. We have, I would like to say in prep calls, someone I'm very anxious to hear from, Furkan Anarat, head of growth at Aunas, I hope I'm saying that correctly, the Middle East's first premier luxury website offering the world's most exclusive brands in an editorial environment. So that's content and marketing, bringing that all together. Globally relevant, locally led, so another angle there with localization. Furkan is a veteran growth marketer, an expert who's worked at customer growth at Careem, before it was acquired by Uber. So you know he understands growth engines. Thank you for joining us, Furkan.
Thank you very much, Peggy. Thanks for the introduction. It's a pleasure.
Well, I love having this group because we are from so many different areas, so many different perspectives, and that's the way you have a diverse discussion. Also, maybe also thinking a lot more out of the box than usual, because we're going to talk about growth. So growth is achievable, as you all know, if you adapt to the developments in your market. And boy, have we seen developments in our markets this year. You also need to anticipate trends. So I'd like to understand more from each of you, the changes you've seen in your market and how you've been able, more importantly, to take charge of that growth, fuel growth through adapting to change. Burak, you know, you've had to do a lot. You've had to balance digital and physical because many people prefer not to go into branches. Can you give me an overview of what has changed for your business and how you were able to serve your customers in these times?
Thank you very much, Peggy. As you said, we are passing through extraordinary times, especially starting with March 2020. The most obvious thing I can say during this period is the acceleration of digitalization in all sectors, not only in banking, not only in services, but in all kind of sectors. So we witnessed the same thing before the pandemic and after the pandemic. It is the acceleration. If I give some numbers, we as a universal bank serving in all aspects of the financial services, from insurance to not only loans and deposits, investment products, whatever you name it, we had around 8 million digital customers in our terms, but especially after March and April, we saw a high accelerated growth in those numbers. And today we reach 9.2 million customers actively doing banking on our mobile app İşCep. This is the most obvious and critical point, or the critical change point in this COVID times. One interesting thing, one experience from the physical to digital and digital to physical, we also witnessed an acceleration interaction on our call centers as well. Because that was the time of turmoil, the lockdowns, all the uncertainties. A lot of people, yes, we had 9 million digital customers, but people were sitting at home. It was a force majeure situation. They were sitting at home. They couldn't go to branches. The unbanked people or the elderly people, so they rushed to the call centers, and we saw huge increases in call center numbers. And actually, the center, in that sense, became meaningless because all those agents in the call centers, we call them quote-unquote centers, they were also serving from home. So we just became the biggest buyers of laptops, maybe, as banks during this period. But in the end, the non-branch transactions of our bank reached 96% of all the transactions. I mean, including the mobile app, internet branch, the ATMs. It is composing of 96%. Only 4% of all the transactions is nowadays are being held on our branches. That's the situation at the moment. Then I can leave the ground to other experiences. Thank you very much. Or if you have other questions, of course.
I did want to follow up for just a moment because you did talk about acceleration. I'm just wondering how that impacted you and your marketing. It sounded to me as if you had to move very quickly to not just multiple channels, but that digital and physical, bridging that gap was very important for you.
Then, yes, as you said, it brought us the problem of being the speedy one. The speed became the most important point for serving our customers. At this point of digitalization, the marketing ads is just the thing you sell your product. It's the same thing at the moment. There's not a acquisition period, a retention period, a selling period. It's all mixed nowadays because of this harmonization of digital technologies. So we tried to answer this situation as being the speed the one. And I'll tell this because we are also, it was maybe a coincidence, but we started to change our organization to an agile organization. And we saw the benefits, especially on the marketing side. We saw the benefits of quickly introducing products, if possible, changing, reverting the products, and managing the demand of our customers.
That's a great segue.
Acceleration and speed.
Oh, sorry.
Maybe the summary of the last 6-7 months.
You make a great point there, Burak, talking about acceleration, talking about change. Now, Batuhan, that probably is your daily motto. You have to be fast, of course, but you also deliver greater value on top of that because you're improving, optimizing a customer experience to drive growth. So it doesn't just mean being fast, it's more. Tell me a little bit more about your value proposition, how you've maybe shifted it or emphasized it in our times.
Sure, Peggy. Definitely, this is our routine, daily routine. So we need to be quick and very adaptive to every kind of change in the market. So, well, Getir, as the creator of the unique value proposition of a 10-minute delivery, actually, of the grocery items in Istanbul, starting from Istanbul, this is our core business model. We have around 1,000 and 1,500 SKUs. Our daily products like milk, bread, diapers, and stuff. So we are delivering this in 10 minutes to millions of users in Istanbul for the last 5 years. So this is what we created, and we are pleased to see that this model also, especially after the COVID crisis, started to expand to other countries as well. So about the change and adaptation, there's a very recent example of that in our business this year. So in the beginning of the year, we have the core value proposition, core product, 10 minutes, limited daily SKUs. This is okay. But with the COVID, with the lockdowns, there's less access to supermarkets, to bulk shopping, to weekly shopping. So people were started to use more online, more mobile retailers. But we saw that the demand was coming, changing rapidly, coming from users. So we are very real-time business. So we can see what is sold at that specific moment. So of course, most of the people using us for the indulgence and for the, for snacks, for some small luxuries in the evening while watching Netflix or something. So, but with these changes, we see the real-time going products change, like rice, maybe some more products going in the kitchen, like pasta, maybe some vegetables and fruits. So, but the whole demand, and with the big sizes, we don't sell very big sizes in our core value proposition. So we had a pilot business model which we were piloting. It's called Getir More. So the core value proposition of that is bringing those kind of goods, but more goods, like around 4,000 SKUs with every kind of sizes, every kind of varieties, but in 30 minutes. So 30 minutes is also faster, because as Getir, if something is done, we are here to do it much more faster. So this monthly or weekly bulk shopping takes either is a slot business model in Turkey, or you need to go there and spend an hour at least. So we promised that in a half an hour model, and we accelerated our pilot. So we go to the field, opened tens of new warehouses for that specific model. We changed our user experience in the application. So for instance, we started to open our application not with the 10-minute model, but with the 30-minute model. And now in the last 6 months, where we came is we had the 1 or 2 Getir More warehouses which were serving at the specific location in Istanbul. Now we have more than 40 warehouses which are serving all around the city, and this at least twofolds our revenue. And much more importantly, we saw the consumer shift, the behavior shift, not only for the impulse shopping, but also for the weekly shopping, monthly shopping. We were able to capture that behavior as well with this rapid change, actually.
Mm-hmm. And also shape that behavior. That's very exciting. Using an offer to also shape some of that behavior and change the interaction through your app. And speaking of apps, Sertaç, you have an app, and of course, all apps, well, not all, but a large number have seen absolutely record organic traffic growth and downloads because, of course, we are confined in self-isolation. This is what we're doing. This is how we spend our time. What did you see? Because that's a great problem to have, a lot of audience, but you also need to hit the right numbers and appeal to your audience. So what did you change or leverage to achieve that?
Let me start from the very beginning because it's all linked. You have explained, I started my career in Dubai and I was being transferred to Singapore office. And I went for a big farewell dinner. At that dinner, we went for a Turkish restaurant and we all had Turkish coffee. So one of my friends told me, hey, Sertaç, I wish your mom was here so that she could read our cups. And I said, okay, she's not here, but why don't we take a photo and send it to her? It was back in 2010. It was 10 years ago. So we brainstormed the idea of having an app so that you can reach my mom, just one person, because she was good at it. Well, we tried and everybody loved it. Everyone said, oh my God, it's like your mom is around here. She's talking to me directly. It's such an intense experience because she knows my story. She knows my background. So she creates this beautiful story. And then I realized, well, maybe there's for me a chance to try my entrepreneurial dreams. So I gave it a shot and I was in Singapore. It was 2012. I created this website. It was just a small WordPress theme so that you can send your coffee cup images to my mom. And just boomed. My mom couldn't get enough. We had to find another person to read cups. And then we had to find a tarot card reader. And then we had to find an astrology expert. And then this and this. So the growth mindset was there in the very first day. But then after, let's say, 4 or 5 years, we hit a wall. We said, okay, we have 1,000 readers and we do thousands of readings every day. How are you going to make 1 million reading? How are you going to make 10 million reading a day? You need an army of fortune tellers. It's impossible. So it's not easy to replicate that idea of fortune tellers all around the world and you can reach out to a real person. And then we found a solution. We said, okay, the AI is taking over the world. This new technology can mimic a human behavior so that if you have enough data, I mean, okay, maybe the coffee cup photos is one set of data, and then your demographics. Let's say if you are a 40-year-old marketing expert, I'm going to tell you something else about your future. But if you're a 25-year-old student, I'm going to tell you something else. So I need your demographic data and I need your photos or your astrology details or tarot cards, right? And then this scaled. This reached 25 million users all around the world. And the idea was always, how can I grow this? How can I grow? Well, in Turkey, we had about 10 million downloads back then. It's like a year ago. We said, how can we make 10-fold, maybe 100-fold growth? We always think extraordinarily humongous vision. That's how you reach a certain goal, right? So when we applied to become an Endeavor entrepreneur, we looked at the numbers. When we were just Binaz app, we had about 250,000 users. Now it's 25 million. It's more than 100 times growth for the past couple of years. So imagine I continue doing this and I try to add new numbers of fortune-telling methods or new languages like Arabic or Spanish or Russian or Chinese or Japanese in the near future. The idea is to bring fortune teller entertainment to the masses, free, either ad-driven monetization or subscription. So because we believe it's a global phenomenon, it's a need of a human being rather than just one culture. The only difference is every culture have their own way of believing in the supernatural. For Turks, it's Turkish coffee cup reading. but maybe for the US, it is daily horoscope.
Yeah.
We all do read our daily horoscopes.
Yeah.
Or for Chinese, it's Chinese astrology.
So
we had to crack that.
So your approach to growth is very much focused on localization and that being the flywheel.
True that. Localization, in a sense, well, not only the language, the product itself. For example, when you log in, you will see a character. This character is the AI, but it is portrayed by a real person, and this real person is me. I am actually the face of the branding. So when you log in, you'll see a photo of myself wearing a turban in the Turkish market because it looks like a fortune teller. But if you log in from the US, I'm not wearing a turban. It's a different branding. But if you're logging from the Middle East, I have a different styling, for example.
Right.
So we always thought the entire experience need to be localized, not only the language, not only the marketing visuals, the entire product. So our approach was to create this localized product for each culture and each language, so that it reaches out to your heart, basically, so that I can speak to you, so that you become friends with my product. That was the approach.
Okay, we'll talk a little bit more about that, but you bring up a good point, which is customization and retail for Khan. That is something that has to be customized in the sense that we are all very focused now on online shopping, mobile shopping. We've catapulted, according to Adobe, 4 years and 4 months in commerce. To start off, what did you observe and how have you used that to inform, or rather to shape, your growth engine that we'll get to in a moment?
Well, Peggy, so similar to most of the other e-commerce players, the first thing we observed is the fire on the operations side. Because in this part of the region, mainly if you are trying to grow, you are cross-borders, working cross-borders. And that made the things a little bit difficult because there were lots of regulatory changes happening because of the situation. And there were some of the countries going to lockdowns. It wasn't so sure how to deliver. And in our business, which is a luxury service, service is the king. So we need to be actually like giving the best service there possible. So we are delivering, our value proposition is we are delivering in Dubai, for example, in 2 hours. Now, when the lockdown starts happening, there's a fire on the operations part. So we first started to solve these problems. At the same time, we started to notice actually like, of course, each crisis brings some opportunities. So we started to see similarly, like the other guests, there are shifts on the behaviors. And as an example, so one of the categories we sell is evening dresses. But if you don't have the events anymore, how do you sell the evening dresses, right? But we noticed actually like some other categories picked up. For example, beauty, because offline world being locked down or people preferring to start using or use more online world, then they start to actually like buy some of their other products that they need from online. Especially we saw this switch happening on the beauty products, and that was actually a great shift for us because the beauty customers have different characteristics than other categories, because it's a product that actually like you need to keep buying. It ends after a certain period of time, which definitely means that if you satisfy the customer's needs, then it's a pure retention play. But what we had to tackle was that, so we noticed also the acquisition cost for the B2 product is compared to, let's say, a jewelry product. We are also selling jewelry products. The acquisition cost of the B2 product is cheaper. But what's important is that we need to cross-sell to these customers who are coming from this channel, right? So that definitely changed our strategies on the assortment side. So we doubled down on some of the categories like beauty, like home, and we started to actually like get more vendors on those categories. We start to shape our teams accordingly. We start to build dedicated teams for these categories. And also on the product side as well, we had to adopt very quickly quickly. So for example, immediately we introduced contactless delivery because like everyone was having questions to contact with the delivery people. I'm sure, especially like in Getir, you guys also experienced it a lot as well. So those kind of agile changes got appreciated from our customers, and we always kept the localized angle as well, not just from the customer's perspective. Also, like we are a local player, we have benefits of this one as well, such as we do have, for example, our own delivery team in the region. Apart from the other third-party logistics companies that we are working together. So that diversification helped us a lot because some of these third-party logistic companies had to also go in pause their services for some time, but we were able to actually still deliver with our own logistics fleet. And what we noticed is diversification maybe is the key word here. That helped us to keep growing even faster than our stretch targets. Of course, we are a very ambitious startup right now, competing with other deep pocket global players in the region for luxury. We need to be smarter, and our targets are very ambitious, but we were able to deliver around like 40% higher than our stretch targets and change this crisis to an opportunity for us. And right now, we are doubling down on these strategies as well, and that is fueling our growth.
I wanted to get to that idea because of the growth engine which you're building is very much about being a scalable growth engine. What I'm hearing and understanding here is well, for all of you, it's really about agility and then translating that into what is relevant to your company. And in your case, it's cross-sell, upsell, segmentation with the product. Maybe you can just in a bit of a brief answer, because I want to ask the others as well, how they are segmenting, converting their customers, ultimately building this engine. What can you tell me rather about the problem you're trying to solve with your approach to your growth engine?
So Peggy, I strongly believe that today is not the age anymore for understanding what the data is telling us. That's old. That's old story. So today is making machines learn what the data is telling to them. So this is to be able to scale. Otherwise, it's not possible to manually go for segmentations and then create contents, pricing, product, adapt your product manually. This is impossible to do. So for scaling the growth engine, creating the flywheel, that's in summary what we are focused on. So we do build our segmentations, models. Of course, this has key elements, this flywheel. This has the product element where you show different products to different type of customers. This has the communication, the CRM element. So you talk to the customers differently. This has the pricing element. You show different type of discounts to the different type of customers. And so that you try to optimize for conversions. This is not something that can be done manually. And it is the age for doing this and through the machines and scaling this up. So this is one of the main things that we are working on for the creating this flywheel.
Well, that's the exciting one. I want to stay with retail for a moment. So I'll go to you, Batuhan. You know, we're talking about this flywheel that is, part product, part organization, definitely data-driven, automation. What does it look like for you? Because your approach to growth has also been to come up with different offers and to organize your organization for success. Maybe you want to unpack that a little bit for me.
Yeah, definitely. What we believe in Getir is that we like to do big punches, So of course, segmentation is very important, but we are now changing behavior. We are changing a habit. So this is a disruptive business model. So we want people to, buy their bread from their applications in the morning. So we want them to get their diapers in the evening. So with that, of course, we have like lots of micro segments and playing on their micro moments. And as Furkan mentioned, we want machines to do this play for us now and in the coming future is better using the data. But apart from the data, we really like to make big moves. So because when you go to itsy and bitsy, segmentation, you can totally easily get lost in there. But in a mobile business, you want to go to a mass and say that, okay, maybe it's because of our industry, you're doing your shopping that way, now you need to do it this way. And for that, we really give like extraordinary offers in the beginning. So we still, when we launch and business, we give not regular deals, not regular offers, but extraordinary deals for the acquisition stuff. Then we will use the micro segmentation for the retention and continuous engagement. But we need to give some core users, some early adapters, something to trigger the word of mouth for them. When we first launched Getir 5 years ago, we give like tens of thousands of free ice cream. So when people, early adapters, ordered this ice cream, bunches of ice cream in the office, everyone gathered around, so said that where this ice creams came from. And they say that there's an application called Getir, you can order it as well. So we just need to give some mass stuff to trigger the word of mouth. And then after the maybe 5th or 10th order, then we can play it out for the micro segmentation and macro moments. And we organize them accordingly for the digital marketing and for the mass marketing as well. Because whatever we do on the app, for example, we do something in the morning, in the afternoon, in the evening, we need to very fast and very rapidly adapt this to our digital marketing efforts. So they are continuously adaptive as well. So that's how we organize in the growth side.
I will get to you in a moment, Sertaç, because we're going to be talking about audience, and that's where yours is a very exciting opportunity and business proposition, very individual, very much a habit-forming app. But Burak, I want to just touch upon this with you because we're talking about the audience and being very digital, focusing on automation for wow moments, for magic moments, as Batman was discussing. But for you, Burak, you have to balance a bit. You have your digital channels and touch points, but you also have your customers, 55 and older. You have to guide them through the journey. You have to balance this very carefully. And it's it's the largest private bank in Turkey. A lot of stakeholders in this as well. If you look at the the third parties in open banking and beyond. So give me a better idea of how you approach growth, given that you have these other considerations.
Of course, but before that, let me say a few words on the segmentation. In the older days, we were talking about mass segments, affluent segments, youngsters, elderly people, etc. But today, it's not even the micro segments; it's the single customer. As Furkan mentioned, the AI technologies and the machine learning opportunities, and nowadays, even in a classic organization like a bank, we are applying AI in deposit pricing, loan pricing, creating sales leads. It's totally a part of our CRM activities at the moment. So that helped us a lot, both in segmentation and, of course, jumping to your question, to serving our customers who are not as digital as quote unquote like the newcomers or digital born youngsters. So what we did, we saw that it's the 55 years of age is not the critical age, but we can take it as a benchmark. We saw that they were either non-digital, they were happy with the branch interactions, or they were only somehow they downloaded our apps, our İşCep app or credit card wallet, Maximum Mobile. But they were not doing actually financial transactions, but they were getting informations from those apps, checking the balances, checking the campaigns. Even they were not doing any, just simple money transfers. So we adopted a two-level approach. and I can describe it as help first and then sell second. That was our I can say. So we analyzed those elderly customers' transactions bit by bit, and we started to teach them what to do in our mobile apps, and what will this bring them in terms of customer experience. Because you are at home, because of especially in the early days of the pandemic period, they were locked down in their houses. So on day by day, month on month, they learned what were the benefits of these new tools, new digital touch points. And I can say that at the moment, we break through this level. Now I can say that even elderly people are as active as the early adopters of digital channel users. That was a growth point in our terms, apart from all the negative health situations. And on the new opportunities side, you mentioned open banking. The Turkish market is quite different from the European and UK market. There's this famous PSD2 directive, Payment Systems Directive, the second one. It's not fully adopted in the Turkish market, but it is going to be. The regulations are regulators, both the central bank and the banking regulators, working on it. We will see a lot of innovations and collaborations with companies like Getir, or maybe even the fortune tellers. We can
great mix with banking. I think we need that. Yes.
Exactly. We may find out very interesting value offers for our customers. Lastly, two important things for the growth engine, creating a growth engine, is the coming to technologies with the help of the regulation, is the digital onboarding in the banking sector. The onboarding process is very different than the other sectors in banking, because banking is a highly regulated sector. It's not just starting with the selling of a product or just downloading an app, your app by your customer. You have to pass through really strict processes, including the cyber security side. Everyone knows when opening an account. So this digital onboarding will create great opportunities for the banking side, for the unbanked people. For example, Turkey is a 83 million population country, but 55 to 60 million people has bank accounts, or we are thinking that they may be bankable population, but this will bring much more new customers to be adopted easily. And the second one is it's again the product of this pandemic situation, remote relationship management. Technology is providing this opportunity. We are able to get in touch with our customers through mobile apps, using our apps. But again, there was lack of this regulation. It is coming as well in 2021. And again, we will see great examples of customer experience.
Well, speaking of great examples, I do see we're coming up on time. And Sertaç, I wanted to ask you, since we've now mentioned that you could also be part of a super app with Burak, you never know. You have an interesting issue, scaling in a growing market. You have an audience, you have an app that has habitual use, you have growth. How do you manage growth, a growth engine in a growing market, rather?
Let me ask you, if you had 25 million downloads and most of them are females and most of them are single, what would you do with them?
Well, you're an ad supported, so you would do dating or something like that.
Spot on. So
okay.
Well,
like this.
one of the most asked question is, when am I going to get married? From the 20 to 28-year-old single ladies. That's the most asked question, not only in Turkey, everywhere. It's such a global phenomenon. Everyone get married. Well, we realize we know you well enough to match you. Hey, I know, I don't know how do you look like, but I don't think it's the main motivation to have someone to marry with. So the main motivation is probably the similar cultures or shared backgrounds or similar expectations about life and from a relationship. But I know that. I know where you come from. I know your questions about life. I know your fears. So I might come up with a good matching algorithm. So we actually tried. I went to speak at the university the other day, and I said, I'm going to ask you 5 questions. How many of, just think about the answer from inside, don't tell me. How many of you watch Netflix? Some people probably said yes. And I said, is it a shisha lounge or espresso coffee? Some people said yes or no. And I asked another question. I said, do you watch this one or that one? And I said, who is answered yes to the first question, no to the second question, yes to the third question? Only 2 people in a 100 people audience university dorm raise up hands. And one of them was a guy and one other one is a girl. They looked at each other. And I said, okay, you might have something. Yeah, you might have something to speak to. Apparently, this works. So this is another section of growth with already millions of users. So you always have to think about what can I offer more, because it's a very humanly need. So I think that's our another growth spot for the near future. And I haven't mentioned this anywhere, so this is first in a YouTube live.
Okay, well, there you go. And a great place to do it indeed, because we were talking about audience. I do see we're coming up on time. I'm actually kind of bummed because I had a lot of great questions about challenges and how you're approaching this, because you're all coming from so many different perspectives to growth. You're in growing markets and you have growing demand, but we're just gonna have to wrap it up, I'm afraid. But it has been delightful, and there will be an ebook, right? So this will all be captured somewhere, and I intend to continue the conversation even after we're done in some way, shape, or form. So there'll be more articles coming. It's a hashtag Shape the Future. I see in social we have started a conversation already, guys. That's great. I just want to thank you all for your time and for sharing. Sertaç, Batuhan, Furkan, Burak. As I said, I could do another 40 minutes, but we can't. So I'll hand it back to you, Hamdan, and thanks so much for allowing us this opportunity to share.
Thank you very much.
Thank you very much, Peggy. Thank you. It was a pleasure.
So thank you. Many thanks to all the panelists. It was an excellent summary from different industries indeed. Thank you. So our next session is with Dr. Omar Rodriguez Villa, who is the Associate Professor of Practice in Marketing from Goizueta Business School, Emory University. Omar is an esteemed marketing strategy and capability professor, researcher, and executive for over 20 years of experience working with multicultural teams in North America, Europe, Latin America, and Asia. He will be giving a keynote on his recently published article at HBR that focuses on a new marketing framework for marketing organization in the new age, designing modern marketing organization.
Well, good afternoon, and thank you so much for the introduction. Again, my name is Omar Rodriguez Villa, and I'm delighted to be here today to share my work with my colleagues Sundar Bharadwaj, Neil Morgan, Peter Shilstrad, and Shubhu Mitra. Over the last, I would say, 3 years, really, we've been pursuing the answer to this question. Marketing, as you know, has changed a lot. And the work of marketing is done by organizations that oftentimes reflect designs, capabilities, teams that maybe were present 15, 20 years ago. And we have been studying and following companies as they have transitioned their organizations and really trying to understand what enables a team, particularly a marketing leadership team, to design the right modern marketing organization for them. And the picture on your screen, it kind of illustrates the challenge. The technology, the data science, the analytics are enabling a lot of new possibilities, but putting the organization together in a way that works is actually quite challenging. And here's why. I'm just showing you on the screen just a collection of different capabilities that come our way, right? To CMOs, to marketing VPs, to brand managers, what should I pay attention to? Is it really about storytelling, or is it about agile or design thinking or UX or CX or sponsorship management or talent management or customer-centric culture or programmatic media or performance marketing? I mean, you guys know I could keep going, right? And the list is long and the clarity is not quite there. So what we found is that in many cases, marketing leaders were having difficulty determining which of these topics do I pay attention to, which ones do I put on the side because maybe they're important but not for us, not now, right? And which ones do I simply ignore because they're just trends that may go away. And that distinction is not as clear. So what we found is that companies, in order to manage the complexity, they are building verticals. So they say, you know what, of course, we have a media team and now we need a MarTech team because marketing technology is becoming so much part of the way we do marketing. And then we need a content team to manage all digital channels and digital content as well as offline. And we need a social media team and a performance marketing team. And you keep adding verticals after verticals. And the sense is that each of those verticals is operating in a way that makes sense to them. They have clear KPIs, they have good processes, they do good work. And it's talented people managing it. But inside the organization, what we hear is that it feels like this, that marketing is increasingly fragmented, done by more and more people, more different experts that come at it with different backgrounds. And it's really difficult for the organization to make sense of how all the efforts come together in driving growth, in building customers, in basically competing in the marketplace. We're doing a lot of things, but we're necessarily not changing the way we market. And that was actually one of the quotes that we heard a lot during our interviews. We studied over 100 companies. We interviewed the CMOs or the marketing VPs. We looked at their teams. We studied their processes, and we started to identify some of the challenges. This is probably one of the main ones. The other topic that came across a lot was confusion about roles and responsibilities, which ultimately is about clarity about what my individual role is in this larger organization. And when that creeps in and that confusion about what do I do, what am I accountable for, how do I grow, when that question sits in, it really impacts the operating effectiveness of the organization. So what we basically came up with is a framework that we believe can help bring some clarity to this process. And it goes like this. When I ask you, what is the right marketing organization for your company? Most times people think about structure and they will start thinking, well, I need a social media team and I need a MarTech team, but maybe they can report outside and then I need to outsource or insource. You see, we go into structure decisions and we find that is critical, but not necessary at the beginning. It is more effective to start with a different question. What value do you want the marketing organization to create for your company? It's a simple question. And you may wonder, why are we asking that question? Is it obvious? It's not obvious. It's not obvious because marketing is not the same in every company. You guys must have experienced this. As you have moved from one company to another, in one company, marketing is primarily advertising. In another company, marketing is driving growth. In another company, marketing is actually in charge of the customer experience. In another company, it may not even touch the product. So marketing varies a lot by company and by industry. Unlike any other function, you don't see a finance manager really changing their role from company to company, but you do see it in marketing. And also because technology and analytics have enabled such different ways of connecting, engaging, and driving growth, that really is a new choice. Like, how am I going to compete? How am I going to combine all these different possibilities in order to drive growth? And here's the last thing I would say, is that to drive growth and to compete today is not only about technology and data, it's also about sustainability and social issues. And those factors are playing increasingly a role in guiding consumer choices. And therefore, you have two forces that are really creating a lot of options about the type of marketing organization you can decide. So we think start there. Start with the mission of your marketing organization. Once you have that, then talk about what capabilities do I need in order to deliver on that mission. You have the answer to those two questions. The third question almost answers itself, meaning if I know what capabilities I need and I'm clear on my mission, then what structure follows, it's actually a lot easier to answer. So let me take you through the work, and I'm going to start with selecting your mission. And here, basically, we need a framework, and we need a framework to understand what is the choice set, what are the possible ways by which marketing can create value, and we call it the marketing value proposition. You may think, what? I thought value propositions were for products and for customers. So yes, well, think of marketing as a function inside your company, as actually the product that you own. And then the stakeholders, the other colleagues in your firm and your agencies, as the audience that you have to engage and clarify what value you bring to the table, right? To the CEO, to the CFO, and to others. And this is your value proposition. Now, how do we answer this question? Because marketing has changed a lot. And what we can do in the context of marketing management is much broader. So this is where we spend most of our time in our research, was trying to derive what are the different areas of value that marketing can create today, incorporating not only the new, and this was the key, that when we started the project, our initial thinking was, you know what, marketing today is the way marketing in digital companies is done. So we just have to go to the West Coast, let's say, to Silicon Valley, study Airbnb and Facebook, understand the way they do marketing, and then that is actually the modern marketing. Halfway through our project, we realized, after studying some of the digital natives and some of the startups in that space that have been very successful, that they also struggle with being clear about the role of marketing, about the way of designing a marketing organization, but they struggle for different reasons than the legacy firms like P&G or Coke or Unilever. So basically, we realized actually a modern marketing organization is a combination of some new practices and skills and some foundational skills and practices, like, for instance, brand management, that it was important in the past and it's still important today, even though in some industries they may not see it that way. So we looked at both, and we came up first, the framework looks at externally, to the customer, what value do we create? And we can organize it in three areas. The first one is exchange value, and that is driving growth by matching the offering of individual customers, customer needs, and in a particular context, to what you're offering, right? In order to facilitate transaction, making it easier and faster for customers to execute on a given purchase, on a given transaction. And that is done today increasingly through machine learning and AI, through performance marketing, through product marketing, right? And that is the space that a lot of digital marketing companies occupy very well, and is a very much part of what it looks like to win today. I think what's important about the framework is that in the minds of some people, that is modern marketing. And what we argue is, no, that is a piece of modern marketing. That does not define it. There are two other ways of creating value. The second one is experience value, and that one is about driving growth by increasing the convenience and enjoyment across the customer journey. And this is about paying attention to pain points and hassles and eliminating that. Oftentimes using digital solutions, yes, but sometimes it's not, right? And the last one is engagement value. This is about the meaning of your offering in the marketplace. It's not only about making it deeper and more engaging, but also about broadening it so that you as a brand can occupy more categories, more spaces, and potentially sell into more areas of opportunity. So both managing the transaction, managing the journey, and managing the meaning, that to us are the three core areas of value to the customer. There are three other areas to the firm, which I'm going to come in the middle, but in a minute. But now I want you to think of this as potential, almost like capability stacks, right? Like you have a category of capability on each. And now these are almost like models. Like you can decide to compete primarily on the basis of engagement value, let's say. And there's a brand in the US called Chobani, which is a yogurt, dairy products. And when we were interviewing their chief marketing officer, one thing he said that caught my attention was that for him, all the technology and all the data that they had available today were enabling things that were done in the past to be done more efficiently and more effectively, but that the core to competing, what is still building brands with profound stories. Right? Now, he saw his ability to grow as connecting with consumers in a different way from his competitors. And now this is, for a yogurt brand, this is quite unique. And in fact, he said that. He said, all my competitors are focused on taste and price and package. Nobody's talking about culture, sustainability, design, art. And he's trying to bring that into the category and compete and differentiate that way. Through our lens, what he was really saying is that, my value proposition as a CMO, as a marketing organization, is to compete on meaning, is to drive engagement value. That doesn't mean that he was completely ignoring the value of the experience side or the exchange side. He just wasn't as involved. There were other team members doing that, and frankly, most of his capabilities were centering on that bottom part of engagement value. That is one way of competing. A very successful company, right? Another way of competing is to say, no, I'm going to compete primarily on experience value. And now, this is an example of Delta Airlines, based in Atlanta, Georgia, where I'm based right now. I don't know if some of you have had a chance to fly, but I'm sure there are airlines in Europe that, or MENA, that have adopted apps as part of the fly experience. But the point is this, that as we travel, when we used to be able to travel before this crazy world we had to live this year, as we travel, there are a lot of pain points, right? How long is going to be the traffic to get to the airport? How long is the security line? Is my baggage loaded on the plane or not? What's the weather in the place where I'm landing? What's the traffic in the place where I land? How long will it take me to get to the hotel? All these questions that are uncertainties about our experience. You can think of them as pain points we have grown accustomed to accept. We just dealt with them. And what Delta has done through their app is basically one by one eliminate those uncertainties. They tell you the traffic. They tell you how long it will take. They tell you how long it will, the security line. You're sitting in the gate and it tells you where you can buy coffee. I mean, how many times are we sitting in an airport? We used to, and we suddenly want a cup of coffee, and where do I buy it, right? All those opportunities to improve the experience of the traveler. That is an example of what it looks like to compete on experience value, right? Using digital solutions to eliminate pain points. Does Delta manage engagement value and meaning, better than Coke? No, they don't. That's not their core. They create value primarily through experience. And then on the other side, you have e-commerce based retailers, Just Fab. There are many others, and they are focused on creating exchange value. And this looks like having hundreds of targets, hundreds of offerings done automatically via machine learning and primarily promoted via digital channels. This is performance marketing and MarTech enabled, and they compete very effectively. When we interviewed and we studied these companies, they don't really pay a lot of attention to brand architectures and brand meaning and brand stories, none of that. And it's not, they don't necessarily see it as relevant, but partly is because that's not their strategy for how to compete. As they grow and as they have to acquire customers that are not solely in digital channels, and they try to compete in other channels and in other customers, they may have to change their strategy, right? But for the standpoint, this is one way of competing. So what we're saying is that we're thinking about these three categories of value, thinking of them as a model, can begin to clarify, well, what kind of organization do I need? Because if I compete in this way, I know what capabilities do I need in order to deliver on exchange value. And I know it's going to be relying heavily on computer science, data science, and analytics. If I compete on engagement value, it's going to be relying very heavily on creativity, right? And culture and design. So it's a very different way of competing. Now, how do you make these choices? There are different models, basically, at the end of the day, that different companies are using to try to compete in today's world effectively. And we think that selecting a model that works for your company is the start of bringing clarity to the process. How do you make that choice? There is an internal process you can do to identify what's the right model. Then maybe, actually, you may be currently constrained to one model because, for instance, competing on exchange relies on having real-time data that in some industries we may not have. So therefore, that possibility is not open probably for you nor your competitors, right? The last thing I would say about these choices is that there are also places where you can get disrupted. So if you're a Chobani and you're competing on engagement primarily, and you're not paying attention to exchange, that is basically a door into your market that could be opened, and new entries, new startups, new disruptors can come right in to create value through that particular capability set, right? And we have seen a lot of the disrupting companies that have entered industries using technology. Basically, this is how we see it. They have come into the industry through the other doors that the incumbent was not leveraging or not paying attention to, right? Another way you can think about making this choice is by using consumer research. Here, what we've done is studied 10 different industries, and we translated these 3 areas of value into consumer benefits, and then we studied how important they were. For this is what you have here is data from almost 46,230 consumer/choice combinations across 10 industries in the US. And in the x-axis, you have age. So from 20 to 60, you see convenience is the dominant. So that experience value in the middle, that is the dominant area of value across all 10 industries that we studied. Then meaning was very important, but it was important only up until 35 years of age. Then you see how the curve goes down, and personalization and kind of the personalization required for the exchange value to occur, it's kind of takes over. Now, when we look at it by industries, when it gets really interesting, right? Because you have here different industries, you have banks, you have hotels, you have retail, QSR, and quickly just think about service businesses, and you see how convenience really goes off the chart in terms of the utility. And by the way, the y-axis is the utility of the different benefits that compose convenience for the consumers that we studied. And convenience is pretty stable across ages. But when you look at products like beverages, for instance, you see that meaning takes over. So it depends really on where are you competing and who's your customer. This is a very dynamic decision. It is not, you should not be emulating the general marketplace. You should be looking and studying your particular consumers and kind of really how you want to grow in that. Which combination of these capabilities is going to help you win. The last thing I was going to say on this is that it's not a steady state. This is not a model that you're deciding and you're defending in perpetuity. This is a model that, think of it as a stepping stone, right? So let's say you're a legacy firm. Let's say you've been in business for 50 years and you're a B2C company. And most likely what you can do best at right now is the left side of your screen, is the engagement-based model. But don't stay there, right? Like you can build the capability stack, and maybe it's easier to go to experience first before going fully into exchange, sorry. And what we see is that the e-commerce kind of digital natives, they're coming into the other way. They have really strong exchange and experience capabilities, and they're beginning to build more engagement capabilities. Overall, a handful of companies like Airbnb and Nike, we think have demonstrated a 3-stack marketing organization, which means they actually are really good at all 3. But that's not a necessary condition to win. As the examples I gave you earlier, you could actually compete by really doing really well in a particular configuration. So that is the left side of the model, and that's about the role of marketing creating value for customers, and how when you choose your model, it brings clarity to the value you create, but also the organization you need, right? Now, on the right side is internal to the firm. And there are here 3 different ways in which marketing and marketers can create value to the firm. I don't think any of them is going to be surprising in the title level. The first one is strategic value. And as marketers, we have been enabling firms to discover new growth opportunities by understanding the customer. I mean, we are the representatives of the voice of the customer. We have been for 50 years, and we continue to be today. And as a result, that is part of what we do, help the company identify new sources of growth. Now, the way we do it has a new possibilities. For instance, monetization. In the past, revenue sources were pretty fixed. I sold a product or a service, I sold it to certain customers. I really didn't question my business model. I didn't question my revenue sources. Today, you almost have to, right? There are kids that are like 12 making more money than I ever will because they figure out new revenue sources on digital channels, right? You need to find, as a marketer, be part of the conversation about how to innovate the revenue streams of your company, how to monetize your assets, how you look at assets in a more holistic way, in addition to, yes, finding new customers and new channels and new needs. Then on the knowledge side, of course, part of our role is to create customer intelligence and marketplace intelligence. Clearly, the way we do that today is very different. So in the model, there's also the aspects of data science and analytics. And most important of all, in this space of knowledge creation and intelligence, is getting closer and closer to a causal understanding of your investments. In the past, we rely a lot on marketing mix models to kind of get correlations between investments and results. And that's good. It's better than nothing, for sure. But increasingly, to the extent that you can create closed loop systems where you have signals in the market that kind of allows you to identify customer needs and allows you to identify how they respond to your stimulus, that creates a closed loop system that then you can measure on a causal effect way. And that's really what creates maximum optimization possibility, right? When you actually are dealing with a causal understanding. So that's kind of the new boundary, new destination on the knowledge side. And then lastly, I leave operating value to last because to me is one of the most interesting ones. See, marketing, because of the way it has changed over the last 10 years, is now composed of people that are very different backgrounds. You have people that study computer science and people that study social science together trying to figure out growth. And if you don't pay attention to that, and if you don't think about the sociology of the organization, not only the technology, but the sociology, how are these different approaches, what are the different mental models guiding their decisions, you're going to end up with an organization that's going to have difficulty collaborating and finding synergies and kind of building on each other to create a better effect than just the sum of its parts, right? And let me give you an example of that. If you have, let's say, two companies, Gillette and Harris, and Harris is a direct-to-consumer company that started in the US, maybe around 2012, maybe getting the actual year wrong. But the point is, it's a DTC company that sold initially exclusively via e-commerce. Now, Gillette, right? It's the incumbent. They sold in retail stores. Harris started winning share, and eventually, he actually became a true contestant in this industry. Harris has a direct model. Gillette has an indirect model. They're not just different channels, different ways of going to market. They are completely different ways of operating marketing. Right? The direct model is fast. The data comes quickly. Data is at the granular level, it's at the customer level. The indirect model is slow. We see data after a month or after 3 weeks. The data tends to be more market level, not customer level, right? The direct model is more horizontal. It's kind of always on. The indirect model is more vertical. I have campaigns, January, my program, for the summer, my program. It's a very different way of planning and allocating resources. The direct model relies more on in-source because it needs to operate so fast, because I have data coming into me hourly, if not minute by minute. So I need to react, respond. And for that, I need the capabilities close to me so I can execute quickly. The indirect model, because it manages vertical, it manages campaigns, it relies more on outsourcing. And lastly, and one of the biggest differences in mental models is that the indirect model thinks of brands as an asset you need in order to sell. And the direct model marketers think, frankly, the opposite. They think you have to sell in order to get a brand. Meaning, if you want to build a brand, put the product in people's lives. Let them use it. Let them experience it. And over time, that's actually going to build the associations and the emotion and the connection you're aiming. You don't need to invest in efforts to build a brand before they buy it. You can now find two more different approaches at trying to find growth, right? And now imagine having these two teams trying to collaborate, because this is exactly what's happening. More and more companies are operating both indirect and direct models, and they need to cooperate. Why? Because otherwise the customer experience is going to be fragmented, right? So if you want to deliver an integrated, a frictionless customer experience, guess what? You also need an integrated and frictionless organization. In fact, you can think of any time you experience a customer as a customer, you go through a process and you feel it, that's fragmented, it's not well connected, it's just a reflection of a fragmented organization. So that's what the operating value is there for. It looks at issues of culture, issues of talent, issues of technology, issues of process, all of which are required to enable that collaboration and that better operating effectiveness across the teams. When you put it together, this is the model that we created. So these are the areas where marketing can create value. You can think of this as your marketing value proposition, and you can focus on exchange value, and operating value, and strategic value, and engagement value. Frankly, the right-hand side, you probably are thinking this already, it's more of enablers, right? The left side are more drivers. And then now this is, we believe, the choice set, right? This helps you decide. Now, from there, you need to determine what are the capabilities. Let's say that you decide to focus on exchange value. We've created a taxonomy of all the capabilities that are required to create all these different 6 areas of value. So we have 18 areas of capabilities, and we've gone beyond that. Through our research, we identify a complete map of 72 activities. These are the activities that you need to master if you want to, for instance, really, if your mission is to be the leaders in the company on knowledge value, on strategic value, and on experience value. This map provides you clarity about what are the capabilities that you need to master, right? Not only be professional, right? That you really need to be great at. Now that means also that there may be some other things here that you don't need to be that good at, right? And that's what strategy is about. It's about choosing how are you going to compete, where are you going to focus on, and where are you not, right? And it should be okay to have a set of choices of areas that we're not going to focus on. And you probably feel the same way I do, and it's really difficult to do that. That it's much easier to spread ourselves thin and say, let's do a little bit of everything. But we know that's not the path to a better organization and better outcomes. So what we've done with this is we've been working with companies to map out what do their organizations look like today. You have here a technology company, a D2C company. You have their configuration in orange. Is basically how important those capabilities are to their growth in the next 2 to 3 years. And we focus on 2 to 3 years because that's about the time it takes to build a capability in our organization, right? And then the blue area is how well developed those capabilities are. So when you compare the blue and the orange, very quickly, what do you see? You see places where they are close to each other. That's maybe that they have good fit, right? And you see places where they're really far apart. The areas are really important to their growth and they're underdeveloped. Well, that may give us clues about what do we need to focus on, right? This is the map for a CPG company, very different. Like if you may have not noticed, but the technology company really strong on exchange value. That's not the strength of the CPG company. This CPG company is much stronger on engagement value. They have a fit level of 74%. When the technology company had a fit level of close to 50% on that. So depending on the company, depending on the industry, the map's going to change. That doesn't matter. What matters, we think, is fit. Is that you are developed on the capabilities that matter most, and on those that don't matter most, that frankly, you're actually either outsourcing or revising your resources so you don't spend a lot of time, effort, and money on those, and you kind of shift your attention to the ones that are really necessary to win today based on your choice. And we actually measure that idea of fit. We looked at the performance of the capability relative to its importance. And basically, if all of your capabilities are in that yellow line, that fit line, you have great fit. That means you have the right modern marketing organization. The ones on the left in this upper triangle, you basically are the ones that we need to invest more, right? Because they are critical importance, but we're underperforming. And the ones on the right are the ones that, the opposite, that we need to revise. And maybe we don't need to stop. Maybe we still need them. We just need to figure out a way of doing them more efficiently, right? So this is data from a real company. This is what it looks like, 72 capabilities mapped. And their total fit level is 67%, which, by the way, right there you have an indicator of progress, right? So you're managing your organization to make sure that you have the right organization to drive growth. And every year, you can set up a capability agenda for the next year. What are the areas that we need to really strengthen, focus on, and what's our current fit level? And as that number grows, that is an indication that you're closer and closer to having the organization that you need. Now, does that number matter? That has been our more recent empirical work. We have data from 348 companies right now, and what we find is that as that fit number increases, so does the growth satisfaction of each of firms, right? So it is correlated. I mean, there's not causal effect here. It's difficult, but at least we see a very strong correlation between increases in fit level and increases in the performance of the firms in our study. And that's the key. And this is probably intuitive, but it's also important to recognize this is not about being good at everything. This is about being good at what matters, and at the same time, deciding not to pursue those areas that don't matter, right? So just to summarize, once you decide your marketing mission and you make choices in around those 6 areas, then it becomes more clear to determine what to insource, what to outsource. You know, what is the role of marketing? And I would say one thing here. As marketers, sometimes I'll speak to myself because I was a marketer. I worked at the Coca-Cola company many years, and I was, always kind of feeling like we should do more, we should own more. It's like, no, there are some things we need to lead. There are some things we need to support because they're managed by other functions, and then there are some things we need to let go and get out of the way so the organization as a whole can move more quickly. Having clarity on your mission helps you actually determine which of those things to let go and which ones to go and lead for the organization. What capabilities you need, what talents and what partners, what individual skills do you need to train for? So all of those questions become easier as you clarify the marketing mission. And so basically, how to design a modern marketing organization? Start there. Start defining your mission. I think the framework we've created helps make that choice a lot easier and also more comprehensive to make sure that you don't miss anything and that you take into account all the diversity of factors that are at play in creating growth today. Once you then assess your fit, you can design your capability agenda. If you're interested in learning more, our research has been published this month in the Harvard Business Review edition of November, December. It's called, "Is Your Marketing Organization Ready for What's Next?" It's like the longest title of an article on HBR, but I do think our research is well described there. It's a good place to go further in understanding the work. Thank you so much for the opportunity to be here today with you. I hope the ideas and the work is helpful. All the best. Take care.
Omar, thanks a lot. It was really, really very insightful and a great session. Now we will be having a 5-minute break, and after that, we will be having more growth marketing sessions. Hi, welcome again. So growth marketing is continuing, and in our next session, we will have a fireside chat with MENA thought leaders, and we will be discussing how to create a better shopping experience to grow your business. So I would like to invite fireside chat with MENA thought leaders panelists, Guido Mancasala, Senior Vice President Marketing from Jumia Group, Josiane Assad, Senior Marketing Director from Talabat, and Emre Tok, CEO of the One Tech Capital, who will be moderating this session.
Hi everyone, it's a pleasure to meet with you all. My name is Emre. I'm the CEO of One Tech Capital, a startup studio in Dubai. Some of you might know I was in the board member of Mobile Marketing Association for a while, representing Karim as the VP of Growth. Today I have two amazing guests from the region. Josiane is the Senior Director of Marketing in Talabat, and she's responsible for regional planning and growth and all the marketing strategy. She oversees the growth and the overall strategy for Talabat in the last 3 years. And also she has worked in previous companies such as, Souk Alamal, Zawiya, Thomson Reuters. And also she has worked with, content, brand, country teams, and also, of course, the last 8 incredible months, which we will discuss today about COVID and COVID times. Welcome, Josiane.
Thank you, Emre, and it's a pleasure to be a part of this panel.
Thank you very much. And also Guido is the Senior VP of Marketing in Jumia since 7 years, long tenure, Guido. And especially he has worked in roles in digital and online marketing. He worked in Google, Rocket Internet, eBay. He oversees departments about CRM, online marketing. And also we together had a lot of good breakfast sessions and chats in Dubai. I missed those times due to COVID, but I hope we'll do with the masks. Welcome, Guido.
Thank you, Emre. I also do miss this breakfast catch up. I hope it's going to be back soon, and I'm very happy to be here as well.
Yeah. So today we are going to discuss about Middle East and Africa, online marketing, e-commerce, and shopping. A little bit about the behaviors and the traction of the customers and what's happening in the region. So I would like to state a couple of things to set the scene. The market is was around like almost $19 billion in 2019, the e-commerce market, and it's increasing drastically. And only the Dubai shoppers is around like 60% of the population is trying to shop. 42% of the people in Middle East, they access their internet just with online intention of shopping, groceries, shopping, food, shopping their necessities, and almost 90% of these shoppers are also satisfied as well. So I would also give a little bit quick fact as well. 90% of the people in Middle East, access their, shopping through their mobile, which is incredible. It was almost 74% over the last 2 years. So there's a huge increase on mobile penetration. And there is also, 44% of the population made a purchase online in the last 3 months. So back to back, because of convenience, better prices, variety, and also, a lot of expense cost, deduction as well. So I want to start with Josiane, and I saw, Talabat's outdoor ads in Dubai a lot, and I really enjoy, guys, because my favorite grocery shop, Karaköy, is in that Talabat's portfolio. So I shop a lot as well. I believe your team did a fantastic job about delivering a very high quality service during the COVID, and the delivery space is getting crowded and crowded. What are the some of the strategic investment in software and marketing spend that you are doing at this time, and how are you differentiating from your competitors?
Sure, I mean that's a very good question, Amir. So Talabat being an online business, we were more of an enabler during COVID times to support our consumers, especially with the whole limitations that COVID has imposed on the consumers. So as a business, Talabat has offered contactless, cashless delivery, but we also promoted the use of online payment versus paying cash. We were also working a lot on our hygiene and safety procedures with the restaurants, with the riders, especially being a last mile delivery company. So there were a lot of things that we as a company, we worked on to ensure a seamless experience for our users during those tough times. And as a business, we definitely doubled down more on our grocery vertical. We started already investing in it since late last year, especially with opening our first dark store, which is called Talabat Mart, which is more of a supermarket, but it's not a brick. It's optimized more for delivery, so you cannot go and shop as a consumer. Rather, it's more for delivery services. So what we have done as a business is during COVID times, we doubled down on our grocery vertical and expanded more our Talabat Mart services across the different markets, where almost all the markets have seen launch of Talabat Mart, where we were providing a 30-minute delivery service, which was quite aggressive and very convenient for users, and 24-hour support. So the users were able to shop for all their dailies, for all their necessities throughout the whole day, and our riders team and our T-Mart team was available for them to provide their necessities during those times. Definitely, that service has enabled more convenience for the user, a better user experience, and has supported throughout the limitations that COVID has imposed on us. Also, as a company, we have invested more in our dark kitchens. So also similar to the dark store, dark kitchens are kitchens, the spaces that are optimized for delivery only, which enabled us to also import new food brands, also new food options for the users, and also provide a more superior or a better user experience overall. As marketing, we ensured also to focus our comms and our marketing efforts on few pillars. The first one being variety, which is Talabat is not just food, but we also have grocery now. We also focus on speed, where as a last mile delivery, as I said, we had many challenges during lockdowns that the team had to overcome to ensure that we are delivering that good experience. And also affordability and being the best choice for the consumer, especially as COVID impacted the disposable income for a lot of households, became very important for us to focus on. So that would be more from a strategic marketing perspective. In terms of channels, being an online and an e-commerce business, digital channels were always the more prominent channels for us. But as in 2020, we had our rebrand refresh, and we also wanted to focus more on an omni-channel approach, which meant that also outdoors was part of our marketing media mix. And that's why you have seen Talabat massively on outdoor campaigns, especially during the end of Q2, as the countries were preparing to start opening up again after the lockdowns.
Great. We have coffeeapp.com under our studio, which is a coffee marketplace. And we use Talabat as our delivery partner as well, in especially in Kuwait. And we see the really reliable, times. You are doing great, and thank you for the explanation. Guido, I want to come to you in terms of the pandemic, shocked everyone in the beginning, and around March, the consumers' demand patterns have really, have a chance for many online and offline consumers, and it has really had interesting times. I think Jumia was really quick to adapt its focus to cope with these, tough times. What was your secret sauce, in terms of especially, growth, marketing, the departments under your responsibility? How did you react? What happened in the, first 2-3 months?
Yeah, sure. So what happened is what you just described, more or less. So the demand behaviors changed, or at least accelerated some of these demand patterns. Focusing on what we call the essential category, it always been part of our strategy. It was part of our 2020 memo. So we knew that it was something that we needed to do more, even more than in the past. That has always been part of our strategy, but we felt there is a lot of growth for the taking in categories such as groceries and essentials, as I was saying. What COVID did has been accelerating all of this. So we've seen a surge in demand for food, for small home furniture, even for sports equipment. A lot of categories different than what is traditionally associated with national e-commerce companies, such it has been for Jumia, for example, for electronics at the beginning. And the company has very quickly adapted and shift our focus on what was in the highest demand from our consumers. In doing so, we partnered with important players in the FMCG industry, such as Reckitt Benckiser. We did a Pan-African partnership, or at least in some key African markets, better said, where Reckitt Benckiser was funding the shipping fees for the Reckitt Benckiser products, especially hand sanitizers and everything about increasing the awareness of the importance of safety and sanitization. And Jumia has waived his commission on these same products. When it came to marketing, as we've seen new demand going towards online, or an increased demand, a new segment of people, we may discuss later, looking into online more and more. We have worked both in acquisition and in retention and reactivation within the marketing department. When it comes to acquisition, more than ever, we invested time together with our data science team in creating dedicated catalogs for our digital dynamic campaigns, which were focusing on specific categories, the one that I was mentioning before, but also looking at the real-time trends within our website and outside of what people were looking at, because it was something new and it was, to a large extent, unprecedented. And we work closely with Facebook team. I saw that Michelle from Facebook Product Marketing team is going to be part of these growth sessions. And she was a great help with it, with the Facebook team. And we now have a much more, let's say, data-driven and user behavior-driven segmentation of our catalogs. When it comes to growth and reactivation, we started creating more tailored user lifecycle communication around brands and very niche categories, as opposed to what we were doing before. So I think the growth team has done an amazing job in working closely with our partners. I would say Reckitt Benckiser above all, in really understanding what is the shelf life of each single subcategory, or even SKU, even for the hand sanitizer, for example, of the wipes, and also what are the cross-behavior patterns between different FMCG products. And we went as deep and as detailed as creating what we call a repeat journey for users at this granular level of detail.
Great, really comprehensive, and I think you spent hours and nights and days possibly for during this time. I mean, nobody had too much time to enjoy outside, so we all possibly focused to work, and that was a good learning times. So I want to ask both of you the same question, but I want to possibly maybe get some answers. Expecting different perspectives from UAE and GCC, and maybe from more on the Middle Africa. So when we look at the the analytics of the community of the changing profile of the online shoppers, I read an article about McKinsey's October 2020 survey, but it was in UK. But I see similar patterns happening in the overall world. The coronavirus crisis report says that almost 65% of the UK customers, they shifted their stores, brands, and then what they shopped. And also there was also another, topic that it was very interesting for me, the age category wise, also maybe different kind of, shoppers behavior categories as well. Like older generation, 55 plus age category, they increased their, shopping, online shopping by almost like 10%. And most of them say that we are not going to go back to street shopping. We will do more and online. So I want to ask Josiane first, if you can, tell what happened in Talabat's, overall profile changes in the last 8 months in UAE. And Guido, possibly I would like to ask it in the same topic for Africa.
Sure. So definitely COVID has accelerated the adoption of online services, especially for verticals like grocery, like pharma products, and also it can expand to what Guido has also mentioned, electronics and also necessities. And what we have seen at Talabat is that the adoption and the acquisition of users potentially that have never thought of ordering online was the main segment we have seen that started ordering, especially within the period of March to June, as lockdown started taking more effect. So the supermarkets, many pharmacies, some countries we had full lockdowns, maybe not in UAE, but some countries like in Jordan, we had full lockdowns. So we have seen a lot of new user segments that potentially we did not think about adopting or ordering online. They started ordering online. And what we also see that their cohorts across the month, especially from March and onwards, we are seeing better retention of those users, especially when they have adopted during tough times. They have seen a good service, and eventually it ended up becoming more of a better replacement. It offers more convenience, it offers variety, it has the SKUs that they're looking for, especially for grocery. It's more optimized in terms of speed. So eventually you are also seeing a better retention, or good retention for those cohorts that were acquired during the COVID period, especially for a market like UAE. But what's also worth noting here is that those user behavior is super dependent on the market maturity. So Talabat covering 7 markets, we have seen different user behavior across different markets. And the more mature the online industry and the adoption of online services, the more the change in the user behavior became permanent. However, the more there's still room to grow from an online and e-commerce adoption, such as, for example, in the case of Jordan, where we have seen that there was a huge spike when the supermarkets closed and the country went into full lockdown. So we acquired a lot of users that had to shop online for their groceries. But however, once the country started opening up again and the supermarkets, the grocery stores opened, we have seen some consumers moved back into a brick and mortar shopping, which means that there are some markets that it's still not a full change in user behavior. It still needs time for education, for enough, I would say, convincing and making sure that they really adapt and be comfortable with the whole online services before they move completely to shopping online. But markets like UAE, we are definitely seeing a more permanent change in the user behavior, and that is very consistent in the retention rates. Also, this means that the whole retention lifecycle campaigns, how you communicate to them from a USP perspective, from a value proposition, is also super important for you to maintain that user behavior. Which means making sure that You keep them on top of what are the new categories you are adding from a grocery perspective, the vendors that you are adding on the marketplace, what are the USPs, whether it's from speed, from convenience, from price and affordability. So making sure that you just do not acquire them and forget about those users, but you also more customize the life cycle campaigns to make sure that they are fully comfortable and keep on repeat behavior and repeat purchase. And also at the same time, how you can convert them into something we call it multi-vertical customers, which means you can acquire them via the grocery vertical or the food vertical, but how can you ensure that also you are pushing them or promoting them to try other verticals you have, which will enhance your customer lifetime value. It will also enhance and make sure that your ecosystem overall is more intertwined and has a better user experience across the board.
Thank you. Guido, tell us what happened in Africa, especially.
Sure. So as you may know, COVID had different, let's say, dynamics, let's call it this way, depending on the different markets in Africa. I would say that there was a very different picture. I would say that some African markets were more mildly affected, among them a good chunk of what I would just call, generally speaking, sub-Saharan markets, while more similar to what Josiane was describing was the GCC and the Gulf region. When we look into North Africa, in countries such as Morocco, Tunisia, or Egypt, it was unfortunately, these countries were unfortunately more affected by COVID. I would say that my answer to your question would be quite consistent with what Josiane has just been presenting, which is on one side, we have seen a broadening of the segment of users that started to look into e-commerce for fulfilling their daily needs. And as I was mentioning, there were some categories that were particularly strategic and instrumental for getting these people to fulfilling their needs and for getting Jumia to position itself as a strategic player to actually enable these everyday consumer needs even more than in the past. I think strategically Jumia had also had a couple of assets that were crucial during these challenging times, such as having launched Jumia Pay since more than a couple of years now, and having reached a very high penetration, especially in markets such as Egypt, which was an enabler, for example, for contactless deliveries, which was something completely new, not only to Jumia consumers, but I would say to the vast majority of consumers in the market. And this is something that has that we have noticed talking to our customers remotely. Unfortunately, in this time, there was a big enabler. So we had people that were trying to find ways to get goods delivered without without needing to having human interaction and keeping social distancing. This was a big thing. And then we have also seen, similar to what Josiane was saying, our cohort and repeat patterns being much more positive as opposed to the past, because the way we have interpreted this is that the experience that we were delivering was relevant, but also the need was recurring. So it's lasted over several months, and when you're about restocking food for yourself and for your family, it is not something that you do, a few times a year or once a month, but things that you need to do several times a week. And that has been quite different and quite amazing for us to observe through the numbers first, and also learning by speaking to our customers.
I think both of the companies did a really, good job in terms of where we are looking at what you are doing now. You are doing great, both of the companies. I think, that time period made you learn a lot of things and practice a lot of things. It's great to hear from you guys openly. So I would go to Guido again, and I want to ask a bit of a question about automation. Guido, when we are sharing the croissant and coffee, you were lots giving me ideas and best practice sharing about what you do on digital. And I was doing the same for, automation and marketing automation, how we were tackling growth at that time with Karim. So what happened in the last 8 months in the pandemic year about especially automation, marketing automation in Jumia?
Yeah, a lot happened, and at least to some extent, thanks to you and the knowledge sharing. So I always be grateful for that. I would say that we have worked. There's been a lot. You can call it back-end work, if you want. That is happening to changing the way we work between teams, and we brought closer together technology, data science, and marketing growth hackers, which was, I think, your secret recipe that you've been telling me a lot and you've been evangelizing so much. So that work had already started, of course. And during this pandemic, I would say we focused on three main dimensions within the user experience. One was the overall prospecting. So how did we go about, let's say, tailoring our content and our value proposition for people that were off-site and they have never used our app, at least for as long as we could tell. Then we focus on you can call it merchandising, but it's the overall experience on the app. And then, of course, we focused also on making sure that we are as relevant as possible in our repeat cycles, as I was saying before, in terms of re-engaging with the user at the right time, but also making sure that the content is as relevant as possible. If not so, then avoid re-engaging at all to avoid being irrelevant indeed. I have mentioned earlier, so talking about the first pillar, about the work that we did with Google, but there's also a good publication that has been recently released by Google, I think with Google, about a case study that we did together, working on our app install campaign. And we have managed to have a dramatic impact, I think, of our cost per acquisition of new users that has dropped by 53% within the Google channels. And this has been thanks to the adoption of a beta technology for e-commerce that Google has released. And Jumia was chosen, let's say we chose each other as partners to integrate this technology for the first time and to have a custom-built catalog for e-commerce for the formerly called Google Universal App Campaigns, more recently rebranded as Google App Campaigns. And in a nutshell, what we did, we created a custom business data feed and we uploaded through Google through API. And this custom data feed was built by our data science team, the team that I was talking to you about before, which is the same team who was working to do the prospection on the on-site, on the merchandising side of things, and also was able to let's say, to have a fairly advanced understanding, although concentrating on only a few weeks, of what were the people were looking for in the first place and also in the repeat. When it comes to growth, the focus, it has been very much twofold. So on one side, what is the discovery that users would do within the first 15 to 30 days since installing the app, with a very strong focus, of course, in the first 3 to 7 days. And this being very much education specific, such as I was saying, you can do safe shopping on Jumia, you can have a contactless delivery, you can register your payment instrument, and you can even win money with Jumia. The more you buy through Jumia Pay, the more you can get cashback or even top up as rewards, so on and so forth. So enable the first purchase. And then the focus was for the repeat, very much introducing the wider assortment, so the millions and millions of products that we have available on our platform that are not easy to grasp from our first browse on the homepage of the app, of course.
We all had the pleasure, the best part of the pandemic, maybe we all have the pleasure to read more, develop more, go into the kitchen, do a lot of A/B testing, fail because, there is no scary thing than failing because, the numbers in the beginning maybe, also, had a lot of tough times, but it was a pleasure at times. I always, perceived the pandemic as a big learning. And by all means, so I think you guys did the same as well. So I want to ask one final question to Josie, and so I would like to look at a different type of marketing, especially the culture of marketing, especially in the teams. Like you cannot go out do outdoor marketing. Even you can put your outdoor advertising, but you can sometimes see by your eyes because there are curfews. There is a lot of things changing. Work from home changed everything drastically. How did you come up with motivating the teams? This numbers fluctuations, curfews. What was your team's reactions, and as leaders, how did you manage this in Talabat?
So definitely 2020 had a lot of challenges, but also a lot of growth opportunities for everyone. And it will always be remembered as a year where we all grew personally and professionally through the challenges. Just to quickly give you a bit of an idea where we were beginning of 2020. So Talabat was preparing since end of last year to have a brand refresh, a new user interface. So we were working also on our interface. We were preparing a 360 campaign for our brand refresh. And that was supposed to go live across all the markets mid-March. So everything was ready for our offline campaign, our digital channels, our creatives, our communication were ready to communicate our brand refresh. And then comes the second week of March, where we started seeing our countries, and starting from Kuwait, going into lockdowns. So we had our offline booked, we had everything ready just to press the button. And then we suddenly found ourselves having to work from home. Our teams were getting used to working from home, working remotely. Also, we had to completely change our marketing strategy in less than 48 hours, which meant changing our budget allocation, changing our communication from discussing, we're talking about brand refresh, to talking about hygiene, safety procedures, talking about contactless and cashless payment, talking about our grocery vertical. So it meant a complete shift of our marketing strategy, also of our marketing channels. We, as I said before, we invest heavily in digital, but that also that we're not able to work on offline, which meant we had to reshuffle our budget from offline, from activations into more of digital channels, adapt more into what type of digital channels we also need to tap into, between brand, between performance. And that also meant the changing in terms of verticals. Should we now focus more on food? Should we focus on grocery? So all of those changes while the teams were working remotely. And we also had to make sure that on a personal level, they were still safe, they were still being motivated. So also productivity was not being impacted. So a lot of the changes were happening, which ensured that we had to move into more of a daily stand-up. So instead of face-to-face communication, we started adopting a new behavior of working together. It included daily stand-ups at the beginning of every morning, where all our regional team was kept abreast of all the changes in regulations. The countries were changing regulations every 24 hours. So those daily stand-ups ensured that our teams are updated, and also priorities were being reprioritized every single day to make sure that we deliver on what was burning and what was important. Also a communication channel. So we had a lot of communication channels, instant channels between all our countries, to focus on the PR changes, the communication on the ground, the riders on the ground, the social media on the ground, and also the consumers started adopting a lot of new social ways. So you started seeing more of smaller ambassadors, or the influencers became each one of us, or the consumers became the influencers creating content. So also that included how we can make sure that the countries were on top of it, and we're also working all together between regional and country teams. So a lot of it included agility, included daily updates, included also being able to change marketing budgets, marketing strategies as the demand required. We also never stopped hiring. So during that time, we were onboarding talents. Our teams were growing. Our grocery team, our vertical teams were also growing, which means we had to just adjust our onboarding processes to support our new talents working from home, getting to know each other's. We all got used to just turning on our cameras and on Zoom calls, which became part of our daily lives. And now we have prepared we started going gradually to the office. So part of our teams are already in the office, which is good as things start normalizing, and we start adapting to the new normal.
Thank you very much, Hussein. I have a lot of friends working in Talabat, and I know that your office is fantastic. I hope when the pandemic is over, you'll make us meet with Guido. I'll bring the coffee because we have the coffee app, so you guys host us, and we'll continue the amazing chat there. I think today the session is over with the timing, but it was an amazing context that you have given about Africa and GCC and the Middle East, about how the e-commerce, online deliveries, last mile deliveries, shopping, and how you guys tackled COVID by focusing, testing a lot, iterating, and also motivating your teams. There are tons of learnings are here with this 30 minutes. It was a pleasure chatting with you, and I hope we'll have a live session, face to face next time, not online. Thank you, Hussein, and thank you, Guido.
Thanks to you.
Emre, thank you, Guido.
See you guys. Bye.
Goodbye.
Bye.
Thank you, Emre, Josiane, and Guido for this insightful session. Our next session with Priya Patel from Facebook, due to time constraints, we won't be able to hold it today. We will move it tomorrow. So we'll have the session with Priya on how to create a better shopping experience to grow your business tomorrow, 1 p.m. Istanbul time and 2 p.m. UAE time. So today, thanks for being with us. We had some very insightful sessions. We covered business unusual and growth marketing themes. And tomorrow, we will have more interesting stuff coming out. And tomorrow's themes and sessions will be on new technology and new business. We'll be streaming it live from our YouTube channel again tomorrow, and hope to see you tomorrow. Bye-bye.